All right, testing 1 2 3, testing 1 2 3. Let me get over to the chat. Booyah. Guten Morgen. Let me test the chat room there. Hey, you. See me, yo. Yeah? Nice. Hey, good morning. How are you doing? Hey, it's Friday. First Friday. Let's get together. Let's have some fun. If you're watching live on YouTube, there is a live chat going on. It's being hosted by FX Street. This is Trade Non-Farm Payrolls Live, month 138th in a row, and that's just about 12 years. Now, what the interesting thing is, YouTube's not even 12 years old, right? So there you go. So you should see some charts. You should see my camera. You should see the chat. And we should be good to go. Yeah? Yeah, 138 months. Now that's actually a trend at some point, right? Cool. My chart's a little messy. We'll get into it. So today we'll talk about technical analysis. Today we'll talk about fundamental analysis. Today we'll talk about trader psychology. But I don't have a presentation like all bundled together and pressed and laminated. You're the boss. I am the humble currency coach that's been around a while, so I can share with you. But you're the boss. You lead the agenda. We talk about what you want to talk about. And, you know, and of course, we got to do the market coverage of all the trading. And check this out. It's only 3 hours. So we can do a lot. We can really do a lot with this time. So, again, ask questions, participation, participation, all of that is encouraged. So let's have some fun too, huh? Hey, Mike, what's going on? I Mike B and I get respect. Your pips and your jewelry is what I expect. Cool. What's up, Jim? A lot of people in the chat. Good to see everybody. All right, so let's do the disclaimer stuff. I got it over here somewhere. Hang on. It's not my typical setup, so I'm a little slow. Where is it? Boom. G'day, mate. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. Please stay small. Stay humble, focus on the long term, and never risk money you cannot afford to lose. I have a feeling that that ain't working. Hang on. Stupid Windows garbage. There we go. So let's go this way. Oh, I don't even have a spot to introduce myself. Let me introduce myself. I feel a rap in there somewhere. I think like, right? Jay-Z says, oh, you're far too kind. But anyways, hey, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. I've been trading for a very long time. Before becoming a full-time Forex trader, I was a venture capitalist. I was vice president of a company with about 300 employees that invested into patents. I made 100 investments. My team made probably another 100 investments, and then we take over patents and put them into the market and license them and stuff. So we had a huge licensing department and stuff. So anyways, that was really cool. And before that, I was almost successful, this close successful internet entrepreneur, which was really cool. I was doing online streaming media before there was online streaming media. So it was almost like a webinar, but it was not quite, but it's very similar. Like you had a PowerPoint over here, you had a live speaker over here, but this is before that existed. So I had a film studio and all that kind of stuff, and I was focused on entrepreneurialism and venture capital in the Silicon Valley. Boom! Apparently people around the world wanted access to venture capitalists in the Silicon Valley in the early to mid to late 90s. So that's kind of the stuff that I did. So that's really cool. And then one day, sitting in my office, 3 giant windows with a view of the San Francisco Bay, beautiful skyscraper, doing the job I love doing. Ran into Forex. I read an article. Some guy was making an unbelievable amount of money, and he was unbelievably young. And I'm like, what the heck is Forex? Right? This is a long time ago. I mean, no joke. And the article was in Architectural Digest magazine, by the way. So it wasn't even a trading magazine. Some guy had bought a beautiful apartment, stripped it down to the I-beams, right, where there's nothing, right, and absolutely nothing. And he spends like $5 or $6 million decorating it. And it's an architectural magazine, so it might have been more. It spent $10 million. I'm like, wow. And then the little blurb in the bottom, it said, Johnny is a 23-year-old foreign exchange trader. I'm like, what the hell? Right? So some kid paid like $12 million for the apartment and put $5 million into decorating, which, you're going to need cash for that, right? It's not like you can get a mortgage on your interior decoration. And then it said, before that, he bought the apartment three stores down, for only $8 million. And then a couple of years before that, it was 3 stories lower, and that was only, $4 million. So I'm like, this kid is rocking it. I mean, just rolling. How much money do you make if you're 23 and you're like, yeah, I'm just going to drop like 15 mil into my apartment, cash. I do this every couple of years. So I'm like, holy schnickerschnocker, right? So I look into it, and I find out that the foreign exchange market is $2 trillion a day. $2 trillion. I'm like, there's no way that that's true. I mean, $2 trillion a year. Okay, maybe I can swallow that, but $2 trillion a day? I mean, it was so funny. I'm like, there isn't that much money in the world. There isn't. It can't be true. And of course, sure enough, it's true. Now we're looking at like $6 trillion a day, right? But I'm just like, oh my God, what am I doing here in this stupid, $1 billion a year market? Why am I looking at $1 billion a year or $100 million a year market opportunities when I can get $2 trillion a day? So I started playing with the Forex. This is back when a chart was a chart and grooving was grooving. Your trading platform had no charts. And in fact, technical analysis wasn't even quite there yet. I mean, sure, we had a few decades of technical analysis, but no one on the planet took it serious. So it was like wild. And imagine going to Amazon.com. By the way, Amazon's pretty new, so it was only a bookstore. And you search on Amazon, there's no books on Forex. Imagine a world like that. Imagine going to YouTube and there is no YouTube. So when YouTube finally launched, years after I started trading Forex, I was the first 22 pages of video results if you typed in Forex on YouTube. So I'm talking about even before YouTube, before Amazon was big, there was just nothing out there. Retail Forex was just literally born, and no one really knew how to do it well. So I had to teach myself. Isn't that interesting? So here we are. I actually think the foreign exchange market's better now than it was back then. It was unbelievably choppy, 12, 13, 14, 15, 16, 17 years ago. I mean, just ridiculous. NFP would have been 400 pip gap. So I think it's better now. I think it's more mature. There are more market participants. More of the market participants know what they're doing. Maybe because I've been doing webinars for 12 years at FX Street. But this is a really good time because it's not so choppy and sloppy. Okay. So I'd like to earn your loyalty and respect over the next 3 hours. I'd like you to go to tradersway.com, open up a demo account, give us an opportunity to, like I said, earn your loyalty and respect. You can download our demos, check out our execution speed, which I know is quite fast because I did a third-party test, much faster than most, and especially the big players in the market. We're a boutique firm that want to earn your business. What can I say? Our customer service is world-class, our execution speed is fast, and our spreads are competitive. Our back office is easy to navigate. Give us a shot, man. Tradersway.com. Give us a shot. We want to fall in love with you. So I'm here to light the candles, pour you a glass of wine, and hit you over the head with a hammer. A velvet hammer, though. Hang on. Let me have a coffee. You might think, hey, well, this guy's an idiot. Yeah, well, it's because I have a tiny head. So anyway, so that's my big history. Before I did entrepreneurial stuff, I thought I was going to be an astronaut, in fact. So I was Top Gun certified through the Navy, did all the testing, selected the Navy for the 8-year program. I worked at NASA for 2 years. And then joined the Navy, like I said, for this 8-year program. First day you go through medical testing, and you strip down to your underwear, and you hold a chart, and you follow a green line from room to room to room to room. You go in one room, look at this, what do you see? I see the letter A. Look at this one, I see the letter C. Great, you're not colorblind. You write on a chart. Next, go into the next room, you're like, what's this? You know, jump up and down and touch your toes, and okay, great, next. Go follow the green line. So I do this all day, hearing, eyes, everything, right? Psychological testing. And then I get to the pee in the cup test, and he's like, ooh, sit on that bench over there. So I walk over there with my little chart, sit on the bench for 3 hours. Thank you. The military is very, right. The military is very patient. And then come back, pee in the cup again, wrote on the chart, red line. The red line takes me to a counselor, and they're like, you're diabetic? And I said, does this mean I'm not going to fly planes? He said, son, I wouldn't give you a rifle, yet alone a $200 million airplane. So get the hell out. No joke, he gave me a subway token and told me get the hell out. They've been driving me around for 2 years with drivers. This one, they're like, get the hell out. So that was my first day and my last day in the United States military. Not bad for a Canadian, eh? Huh? Doing my part. So instead, I decided to become a businessman, and here I am. All right. So going back to the, like a chicken. I don't even know what that means. Anyways. This goes back to the mantra. I did a business planning retreat with myself a long time ago at the Ritz-Carlton in Half Moon Bay, California. It was, I think, 2 or maybe 3 days, which I just did intensive planning with myself. And one of the things I typically do if I was running a successful business is, you have very clear things like mission statements, operational direction statements, Ryan loves SWOT analysis. I did SWOT analysis. And then I wanted to come up with a credo. Like if I was to teach other players on a team, because that's how you run a business, right? What is it in clear, concise ways? What is it that we do? Okay. And so I realized I wanted a credo. Okay. Mike says, does that make me a veteran because I was in? You know what? I bet you I legally could, but it's something like, like David Pegler, someone I respect immensely, actually went and served, right? And everyone else that went and served, how could I possibly steal their benefits because I was in for a day? You know what I mean? Like, do I get a tax break? Do I get free medical stuff? I'm just, you know what? I don't want to run into a guy that's lost his arms and his legs and then say, oh, dude, I stole your benefits. I never looked into it. I just couldn't do it. Right? I just couldn't do it. So anyways, if I was kicking down doors and killing bad guys, not a problem. You owe me. But come on. So anyways, let's go back to this. So the credo, very simple terms, okay? What is it that I do? In what order do I prioritize my thought process and my actions? It was a very simple question, but you know what? If you do business planning retreats with yourself, and you ask yourself very deep philosophical questions, when the shit hits the fan, pardon my French, you know how to react. You know how to respond. Because it's clear, emotionally as well as intellectually, right? So my number one goal is capital preservation. And by that, I mean don't lose money. Live to trade another day, right? Because in Forex, money is your product, money is your service. If you don't have money, you just can't be a Forex trader, right? So the number one goal is do whatever it takes to not lose money. Now, maybe to you that means stop the bloodbath of stupid trades and revenge trades and all that kind of stuff. But at some point, you have to say, is this trade worth the risk? Am I willing to risk money now? Or can I wait for a better opportunity? And that mindset's different than sort of the video game mentality of a lot of new traders, right? You just pop in a trade, boo, 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 boo. And all of a sudden you're like, I hope I made some money, right? So at some point you have to say capital preservation is the number one goal, right? And that's taking control. That's looking for patterns, setups. That's trading at the right time of day. Just because you have a day job doesn't mean you should be putting all your trades in at the Asian session. You just got to make a sacrifice somehow. Get up in the middle of the night and make your trades. But, you know, that kind of stuff. But you have to protect your money. One great example of that is if you lose 50% of your account, you need to make 100% return to get back to break even. But if you suck so bad that you lost 50% of your trading account, how could you possibly, conservatively, right, double your account? And even if you could double your account, you're just back to where you were. So why not just not suck in the beginning? Right? You get it? Like, it's that important. Just preserve the capital. Don't even put yourself in a scenario where you might lose a lot of money. It's the first step to move forward. Then the next step is, okay, when I do trade, what is the goal? Make as many pips as possible? That's a little vague. And, you know, and I worked on this a long time. But, you know, talk to a salesman, for example. I used to run sales teams of like 300 people, right? So, and in fact, when I was in college, I ran a nonprofit organization overseeing an organization of 3,000 people, and George Soros sat on my board. So I know teams, right? And so what do? You get, let's say, 300 salespeople in the office, and like, all right, how many sales we're going to make? 1 million! Right? Whoa, dude, how did you figure that out, right? How did you figure that out? So, I mean, you got to plan. You got to have a methodology. You got to have matrices. You got to, what's the new one at school? They talk about rubrics. I'm like, what the hell? Overeducated, underpaid people drive me nuts, right? What's a rubric? But so anyways, you got to have a methodology, right? And so like, well, you know, how many closes are you going to get? Great. Well, then how many contracts? Well, great. Then how many sales, second closing sales presentations? How many initial sales presentations to get to the closing, and then how many of the closings get to the contracts, and how many contracts out actually get signed? Well, great. Well, then how many phone calls are you making per day? How many prospecting calls do you need per day to get those phone calls? And all of a sudden you're like, $100 a day gets you 10 talks, 10 talks gets you 2 presentations, 2 presentations gets you 1 closing presentation, 1 closing presentation doesn't even get you a contract. You see what I mean? Like, but you need 5 contracts out there before you actually get 1 closed. You're like, whoa, dude, you need 500 prospecting calls to get 1 deal closed. You know what I mean? So capital acquisition, what does that mean? You can't just say, I want to make as many pips as possible. If it's vague in your mind, you're not going to do it. Business planning requires you to be specific, measurable, attainable, realistic, and timely. Right? You got it? So, great. So when I make a trade, the goal when I'm in the trade now, assuming the trade is good because I'm preserving my capital, the second part is I have to have a minimal acceptable performance. And for me, I analyzed like 2 or 3 years of trading data, and I came up with a minimal acceptable performance of 15 pips because my analysis told me I can get lucky and make 10 pips with my eyes closed, or get unlucky and lose 10 pips with my eyes closed. But it didn't really say anything about the quality of my trade, right? You can get in late and probably still make 10 pips. It's still a lousy trade. But I found if I can make 15 pips, almost always, it would go to 30 to 40 pips, 30 to 45 pips. So I wanted to look for situations where I could get 30 and 45 pips, knowing that if I get into the trade and it's working its way to that 45 pips and then it collapses on me, I should have 15 pips locked in. Just the way I analyzed my trade. That was my personal trading history. So I knew my minimal acceptable performance for every trade had to be 15 pips. And if I was disgusted if I only made 15 pips, I'd do well. It's not like it was my goal. That was my minimal acceptable performance. That's when I'm pathetic. Like, oh my God, this whole thing collapsed on me. The trade sucked. Who the hell sold in this uptrend, man? I only got 15 pips profit. Oh well. Okay. Okay. Now the next thing is once I'm able to lock the 15 pips in, and what you do is you move your stop from negative to break even, and then from break even to positive 15, right? Once you got that locked in and your trade is worth it, you let your winners run. If you cannot let your winners run, you will not become a huge success in Forex. And you could just do the math, for crying out loud. Just figure it out. If you make 25 pips, right, on a trade, that's your average. Well, what's your winning percentage? 50 or 60%, 60 or 70%. You start adding it up, even if that's pretty good, right? You start adding that up, it's not a lot of money. So you're like, well, I'm doing really good and I'm making the pips. I'm making like, there's professionals out there bragging. You're like, I made 600 pips over the last 6 months. You're like, really? Okay, great. So you make 100 or 200 pips a month because you're making 25 pips per trade and you got to pay for your losers and stuff. So if you're lucky enough to make, let's say you're making 200 pips a month, how much money is that? It's nothing, right? So how do you, so let's say you're even lucky enough to get to that level where you're making 200 pips a month. Well, then the only way to make serious money is to increase your lot size relative to your account size, which is called leverage, and you've just put yourself on the path of doom. And it's because you're not letting your winners run. The only way to make it big is to understand, the technical and fundamental analysis of trading, but also sort of the seasonality business cycle of the market, knowing when to be happy with 25 to 50 pips, and knowing when you should be going for 250 to 500 to even 1,000, right? Pound yen went up 1,000 pips over the, not that long ago, and it was all set up in advance, probably even one of these NFPs. So you got to know when to hold them, know when to fold them. But the thing is, you'll never make it big unless you do let your winners run. It's the only way, right? So I realized that once I have my map in, my downside's taken care of. I've mitigated my risk. In fact, removed the risk. Now I got to go for it. I need some home runs. Okay? I need some home runs. Do I do that, all the time? Seasonality is a big part. We could always cover that later. Okay, so that's just kind of getting our mindset on there. I'll go over the setup, I think, later. Well, you know what? Let's do it now. Take a screenshot, if you will, so we can talk about this. And 5, 4, 3, 2, 1. All right, so you should have a screenshot by now. So let's talk about this. This is 2155. What I'm doing here is I'm measuring the speed. Well, first of all, the direction and the speed of the marketplace. 21's below the 55. Technically, I'm bearish. Down here, we're below the 21. I'm bearish and aggressive. Then we breach the 21, and it reverts back to the 55. 55's in control. I'm still bearish, but I'm conservative, and I'm looking for bottom. 5-8, I use this for entering and exiting. Okay, 5-8 cross is simply showing me price. So I'm separating market. Oops. I'm separating the market. Look, the market's bearish from price. Price is bearish. Look, it's not bearish anymore. Take your profit. See the difference? This just kind of keeps you short forever until the 21 crosses above the 55. This says sell. This says take profit. Nice. Okay. That's the fair market value, the 200 EMA. Yeah, Mike. Mike, don't spill. But imagine that, Mike. I interviewed with Mike's laughing. He says, "I beat in the cup. Where's the red line?" Right? Imagine this: you spent probably 5 years dreaming of something, and then working toward it, and then interviewing with every military, including even the Coast Guard, right? Every branch of the military in the United States. And having them wine you and dine you, take you out for dinner, driving you around in cars and stuff, and going to meetings and going to testing. I did all the testing. I got some great stories about the actual written testing, the psychological testing, all that kind of stuff. And so you're working very diligently for years toward a very specific goal. I mean, look, working at NASA was cool, right? Working at NASA was cool. So I was doing everything right. So then to pee in the cup, and they say, well, you didn't pee in the cup wrong, you're fired. It's heartbreaking. But what do you do next? Right? So then, becoming a successful entrepreneur in the Silicon Valley in the early 90s was fantastic. Great. Just loving it. Right? Did amazing things. I was probably in, I think, 5 newspapers around the world and probably 20 magazines around the world, including Inc. magazines, Hot 100? Yeah, Hot 100 Startups issue. I'm in that. Like loving it. And then one day, boom! And I'm telling you, it came down to a day. Boom! The internet bubble burst. All of a sudden, people owed me money because their companies went out of business. So I'm calling them like, you owe me money. I need money. I need money to pay my rent. I need money to pay my employees. They're like, we don't have any money. It's over. And all of a sudden, I'm scrounging around. I'm selling furniture. I'm making donations to nonprofits. I'm telling the employees, just take stuff. Just take whatever you need it. And here's all my money. I'm dead broke. Just take it. Right? Walk across the street to another company. And I said, I'll work for you for free. I want part of the money as it comes in. And I want ownership of this company. And I will save you from going bankrupt, which was true. Walked in. And 2 years later, we're making $1 million a month. No investments. No advertising. Got on the phone. Boom. Right? So like no time to cry. And Forex, right? Same thing. Forex will kick you in the gut. Even when you're down. You need the strength and the fortitude to say, I can get this done. So, now I'm a Harvard student, right? And I think probably every person there is smarter than me. I'm sure of it. They're not as good looking, of course, or modest, but they're definitely smarter. But I'm probably a harder worker than most. Although some of those younger kids at Harvard College are like nerdy, smarty pants, hardworking too. But whatever. Right. But they go to parties and they're like, the keg's empty. I'm like, no, dude, you have to pump it. Oh, really? Thank you, Grandpa. Bunch of nerds. But anyways, it comes down to hard work, strength from your confidence and confidence that you've earned. Right? Forex is going to test you. But I tell you, it's worth it. So if you imagine that I've reviewed at least 1,000 business plans, this is it. This is it. There is nothing better. No accounts receivable, no accounts payable. I mean, this is it, man. This is it. There's nothing better than Forex. Otherwise, I'd be doing it. You see what I mean? If there was something better, I'd be doing that. But as vice president, they just made me vice president of the firm. I mean, that's nice, right? So I quit, became a Forex trader. Okay, so anyways, going back to this. If I use volley bands, that's for volatility. You'll probably see oscillators on some of my charts. What I do is I speed the stochastics up, and that gives me the overbought and oversold conditions for price. Remember, I'm using moving averages to say, this is the market, this is price. And why do you think I do that? Well, when the market's falling, I want to sell. When the market's rising, I want to buy. But when do I pull the trigger? This is the next question, right? Well, that's what the 5/8's for. That's price. So in a falling market, I want to sell. So think about 5/8 cross going up. Do I want to sell? No. but then it crosses, now it wants to fall in a falling market, sell that one. But see, it sounds easy, and everybody probably knows this because I've been doing this for so long, but you go back to when currency traders didn't even have charts. There were no books. There was nothing, right? I had to find stuff from the 1980s about MACD. So Gerald Appel, the inventor of the moving average convergence divergence indicator, gave a presentation about the MACD, which they didn't even call MACD. Some people even called them MACD when I first started trading and experts suddenly appeared. They were calling it like the wrong stuff. And I'm like, dude, this person's an expert. And they call it the MACD. I mean, no joke. Suddenly experts popped out of everywhere. And I'm like, dude, I studied this stuff from the inventor. And these guys don't know what they're talking about. But anyway, so I'd find old presentations from the 1980s, like printed out stuff, and audio. Literally, I'm listening to Gerald Appel teach me about MACD. I'm listening to John Bollinger teaching me about Bollinger Bands. You know, and so now you go listen to the experts that are like, yeah, look at this, ride the band. Talk to John Bollinger. He said, I never said anything like that. Right? Like, you got to be careful. Most of your gurus might not actually be gurus. I don't know. So anyways, I'm separating price from market so that I sell in a falling market and I buy in a rising market. And then if there's isn't congruency between the two, the market might be neutral and I should probably be cautious. See? It sounds super easy, right? But it should be logical. If it's logical, then the rest we can figure out together. But a lot of people are like, well, I got to wait for the angle of this to be the zippy of that. And oh, and the CCI or the ADX has to have a certain combination of blah, blah, blah. I'm like, dude, just buy in an uptrend. What's wrong with you? Right? Oh, well, the angle on my Gartley, my Gartley pattern, my butterfly. My butterfly isn't right. Dude, it's going up. Buy it. But don't buy a green candle, bro. Wait for a retracement, right? So it should be super easy. And if you can figure that out, we'll work together and now just work your butt off. And maybe in 15 years, you'll be sitting here and you'll be a half-decent trader, right? But I sucked when I started, and I mentioned that in my book. I sucked, so I started doing really very specific things to improve. And after a while, I sucked a little bit less. Time went by further, and I sucked even less. Right? Great. It's a beginning. But I had to figure everything out. So now I'll just teach you what I figured out. Seems fair enough, right? So anyways, that's what a chart's going to look like, but we're going to look at multiple time frames. We'll get to that. We can work together. Okay? So what's the time? Stupid shirt. Ugh. All right, so we got just about a half an hour. So let me quickly go through the scalp now, okay? And then we can talk about everything a little bit closer. But I am assuming that you've done your homework, okay? I assume you've done your homework. So about 3 years ago, I spent an entire day writing an article for FX Street on how to prepare for and trade non-farm payrolls by developing a model. Okay, that got like several hundred likes. And then FX Street expanded upon that by getting advice from other experts and doing an amazing amount of analysis and compiling and pooling resources for you into one sort of guide. It's beautiful. It's beautiful stuff. It's the Picasso, right? So I'm assuming you've done that. If you're just here to say, hey, Wayne, tell me what to do, I already know what to do. But I'll tell you, if you're asking me that question, you're not going to be here 15 years from now. Okay? You need to be focused on yourself, developing the skills yourself. So if you want to become a professional money manager, realize that your job is to have answers. Verifiable answers based on logic and intelligence. So you don't listen to the guys on TV like the people behind me. I don't listen to them. I don't even have sound on that PC. I don't have sound drivers. So people on CNBC and Bloomberg are talking. I don't even hear them. I'm just there. I have them up there because I get lonely. I'm so lonely. I'm here all the time. I'm so lonely. And that's all it is. I need human contact, right? Right? They're my best friends up there. I used to have a volleyball. Wilson! But now I got CNBC and Bloomberg. But that's why it's there, right? So what you want to do is develop the skills through the analysis of economic data, macroeconomics, and central banking policy. The news is not necessarily fundamental analysis. So like what happens today at NFP, that's a news event. That's economic data. That's an economic release. It's not necessarily fundamental analysis. Fundamental analysis is, okay, how does that affect the central bank of that currency and their monetary policy? And what are they thinking of doing in the near future? Does it make them want to do the thing in the near future sooner? Does it delay the thing they're thinking of doing in the near future to later? Does it have no impact on either of that? Does it confirm it? No, that's fundamental analysis. Okay? What Trump said, what Rocket Boy said, that's not fundamental analysis either. Now, you might get some geopolitical risk in there, but again, that's not fundamental analysis of macroeconomic data. Okay? So anyways, the news is going to come out today. The market will move. That I can tell you. Okay? Will it go up or down? I don't know. How would I know that? I'd be a fool to pretend I did. But I can tell you this. Let's look at a 1-minute chart. And we'll say Euro USD. But I might change that up depending on some other things, right? But let's just say we're going to look at a 1-minute chart. And the news is going to come out, and it's either going to go green or red. This is a high volatility event-driven strategy, aka a scalp. Are scalps fast or slow? They're fast, which means there's no group hugs, no committee meetings. So we need some rules of engagement. Because if the bad guy sees you, you're already dead. So you got to plan ahead of time. Get the fire the first shot, right? So in this case, our plan is this. News is going to come out. All right. And by the way, there's this and a second strategy that I published on that report. There's 2 scalping strategies. Well, one's almost a spot trade, one's a scalp. Okay? One's a counter trend, one's a volatility. Right? So if you want, it starts with the vol, and the other one's the counter. All right? So anyways, the volatility trade, boom. In this case, NFP comes out, and suddenly out of nowhere, green, 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 green. Guess what? We're bulls. But standard operating procedure for a bull is not to buy a green candle. Right? Only fools buy green candles. Right? Like real estate investors. They like to buy high, hoping it goes higher. Great. Right? No, you're supposed to buy low. By the way, so many people love and hate Trump. And I've asked a lot of people that love or hate. And there's more that hate than love because the people that voted for him don't really love him. They hate everybody else, right? So anyways, out of everyone I've asked throughout the world on my travels, and I've done 130,000 miles this year, guess what? No one's read his book. Read The Art of the Deal. Just skip the second half. Read the first half. It's fantastic. And he'll tell you stuff like location, location, location. That's not the #1 rule. It's the price. Get a good deal. If the location's mediocre, but the deal, the value you pay is extremely low, then you got value built in. Don't overpay, underpay if you can. That's how you do it. So anyways, read his book. Then tell me if you love him or hate him. Here's a guy that doesn't eat lunch because it's a waste of time. Doesn't go out to fancy restaurants with all these idiots blah, blah, blah. Let's go have a $300 lunch. I made $3 million a year last year. Look how fast my car is. He's not that type of dude. It's interesting. I'm not saying I love him or hate him. I'm just saying you don't know him. But so many people are opinionated. It's amazing. So anyways, green, 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 green. Don't buy yet. And certainly sell. When can you sell in this scenario? Never. Never. Okay? So what we're actually just doing is identifying resistance. I might draw this line in the sand, I may not. Okay, these are charts just straight out of my book. Okay, so what we're actually looking for is a retracement somewhere between the 382 and 618. That's called the sweet spot. And somewhere in there we need a long. Now this is where you got to be quick. No, like I said, no committee meetings, no group hugs. You're going to buy or you're not going to buy. You're going to make this trade or you're not going to make this trade. It's a scalp. You've got to be hot to go HOTTOGO. So somewhere down in there, you need to see in your mind, and it may not work out quite right, but what you're looking for is not just that retracement, but that it's holding. And it might only be for 30 seconds. It might be for 2 minutes. But at some point in there, you're like, boom, and you got to buy, and then you drop your stop just below this area. And you'll notice that that's risking a whopping 15 or 20 pips. So let's say your maximum risk allowed on this scalp is 25 pips. If you lose more than 25 pips, it's your own damn fault. Nobody cares. You don't have discipline, and you're a liquidity event for someone that does have discipline. So don't risk more than that. Okay? Okay? So here's the thing. I don't like giving perfect examples in any presentation. So here's one that's not perfect. It came down to 382, 50%, 618, all in the same minute. But it looked like the 618 might hold. It started to go up. You might have got suckered into that. You might have bought that. I'm okay, because your stop's still below the lowest low. But then you'll see the next candle actually did drop to the 786. And you're like, whoa! Because anything lower than the 786 is a reversal. But then the next one held. And then the next one held. And then the next one held. I mean, clearly, somewhere in here you're long, and your stop is down here. You're risking now 15 pips. Good to go. Okay? It starts moving up. You'll notice that 1, 2, 3, 4, 5, 6, right? Within 4 minutes, you're generally at break even. If it takes you longer to get to break even than 4 minutes on a scalp, we've lost the volatility. Your trade may not be losing, but this volatility is gone. How could you possibly scalp without volatility? It's a high volatility event-driven strategy. If it's 7 or 8 or 9 or 10 minutes and you're still moving sideways, maybe you just get out at break even, take a small loss, just walk out or jam your stop and just let it go or something. But the plan has failed. You might not have lost money, but the scalp is dead. Sure. So Carlos and a few are talking about the Trump, you know, whatever. I don't care. I don't care if Tony Schwartz wrote the book. I don't care if Tony Schwartz loves Trump or hates Trump. It's not the point. The point is you don't know him, but you might be super opinionated from, I don't know, I guess I had never watched The Apprentice. I'm sorry, I don't watch TV. Read the damn book. It's from 20 years ago, 25 years ago. And then develop an opinion. Then hate him. I hate this guy because he flew helicopters to have dinner with the cardinal of the Catholic Church. And good, great. Okay, cool. So anyways, at this point, jam your stop at break even. We approach the line at the sand. I did the drum roll because only one of two things is going to happen here. This is going to pop and you make money. But this is also the place where the whole thing will collapse and fail on you. So this is where you definitely need to be at break even. And boom, it broke out and you made money on the scalp. That's it. High volatility, event-driven strategy. The second part of this is that, let's say that's euro dollar. What we'll want to do is we'll look at this bigger chart, 4-hour chart, look for pivot clusters, look for things like key support and resistance of market, like these areas here, and maybe even this one, although I think that's a minor one. And let's say this does break to the upside, but you want to sell because you're a bear. You don't have to trade long if you don't want to. So let's say we're up here. That's the counter trend trade. Then you want to start looking for reversal patterns on 1-minute charts way up there at hardcore resistance. And the reason it could counter trend here, first of all, it is resistance for multiple reasons. But anyone that bought it should take profit there. You understand that point? Anyone that went long short term on the vol trade should take profit at that resistance. The brokers, to get them out of the long positions, then enter short positions to offset their longs, which then sends the market short, which then hits stop losses because other people jam it because they're hoping, because they have no trade plan whatsoever. They're hoping it'll go higher. What do you mean hoping? You're at resistance, monkey head. No, I'm hoping it'll go higher. Good. So now their stops will get triggered, and that'll enter more stops or short positions, and then that'll freak other people that'll take their profit. And then, of course, bears will probably get in and start shorting into that, and now you get the counter trend trade. Hua? Give me an oorah. So that's the high volatility event-driven strategy, scalp long, and then the counter trend trade. And, of course, that might be here, or here, or here. We don't know. That's why we need to do technical analysis. Okay? Now, the whole thing in reverse is true. If the dollar gets ripper strong, then we're going to end up scalping down on a green candle several minutes after the news. I got to keep my eye on that. And then we got to look for key levels of support, like let's say this. Okay? And look for the counter trend back that way. Okay? But we don't know. We need to identify the support or the resistance first that creates the counter trend. And then we need to use technical analysis to confirm that market participants are respecting those levels. Otherwise, you're just a degenerate gambler that says, I bet you that M1 will hold. I bet you that S2 will hold. Yeah, but I don't bet. Right? Because capital preservation is my #1 goal. Cool. So let's get the, well, we're still pretty early. Let me fire up Trade the News just so we have some audio. So at this point, you should be cruising through FX Street, finding out what the weekly trend in jobless claims is. You should be able to look at the trend in headline and revisionary non-farm payrolls numbers. You should be looking at ISM data, such as the employment subcomponent of the manufacturing and service sectors. And you should probably look at the Challenger Christmas in Gray release on mass layoffs and have a model in mind. Above and beyond that model, because that just gives you an idea, okay? That just gives you an idea of what the number should be. But is that really that important? It's more like if the number is about right, how will that affect the Fed? When is the Fed going to raise interest rates? Huh? Oh, thank you for that. Moderator, is that my model or the new improved one with everyone's stuff in there? Boy, I haven't been here a while. This isn't the right one, is it? They updated it? How interesting. I haven't been here in a while. All right. So when's the Fed going to raise interest rates? And you're like, well, I don't know. It's a guess. It's not a guess, bro. November meeting, 1.5% chance they won't. Otherwise known as a 98.5% they won't raise interest rates. December, boom! 84.2% chance. What's up? Now, how do they do that? This is the Fed funds futures market, in which very sophisticated investors, these are banks lending other banks money. They're very, very sophisticated, very, very deep liquid market of very, very smart people pricing out future prices. But to calculate future prices, you have to know the interest rate. So they're negotiating with each other with assumptions on what the interest rate will be. So this is the assumptions of thousands of incredibly smart people managing incredible amounts of money. And they tell you what they're actually pricing in. It's not opinion. It's not like, hey man, how do you feel about the market? What do you think is going to happen?
And
this is them actually negotiating.
September change in
money.
non-farm payrolls expected at 80,000.
This tells you what they're negotiating. They're telling you
prior.
the Fed
that number
will
reflects
raise interest
the
rates.
hurricanes occurred in
chance
September, which is
they will
expected
raise
to
interest
depress
rates
the
in
non-farm
December.
payroll number and cutting
And
it
look,
about in half of what would have been expected. And consensus expectation 80,000
and
for non-farm payrolls.
1.5% chance they raise
Unemployment
early.
expected to remain at
I mean,
4.4%.
they're
Average
going to
hourly
raise
earnings
interest rates.
expected at
Everybody knows
0.3% month-over-month, 2.6% year-over-year. Those a little higher than the
so
prior
what
month.
is going to change that?
May have been distorted by the hurricanes, as some lower paid hourly workers in Texas and Florida
what's going to
may not
happen
have been
today
paid
to
in the
change
period.
That is the important question.
The hours expected to remain at 34.4 and participation rate expected to remain at 62.9%. We'll also get Canada unemployment rate, net change in employment expected at 12,000 for Canada for September, with unemployment expected at 6.2% for Canada.
So you see what I mean? Is anything going to change? Is anything going to like suddenly make the market go from 1.5% chance to 100% chance in November? I mean, like nothing's going to change that. What's going to change December? You would have to have a horrible number in NFP, like negative. Instead of making 250,000, you'd have to lose, and the whole market would have to freak out, like, oh my gosh. But bar a nuclear strike, the Fed's going to raise interest rates in December, and that's that, regardless of whatever happens here. So I don't think we'll get a huge, crazy NFP today. So it'd be interesting if it came down, and it would be great if it went back up. But if it spiked that high up, it would be down. I'm even guessing that it's not even going to go that high, that we're going to find ourselves at this cluster. But that's just a guess. Remember, all this is a guess, otherwise known as a hypothesis. And the hypothesis, through scientific methodology, needs to be confirmed or rejected. Okay? Right? I'm a college student. I'm constantly doing stuff like this. All right, so I'm going to turn the audio on. This is TradeTheNews.com.
This is a 24-hour live broadcast test channel from the Trade the News Broadcast Network.
Okay, we got it. Yeah, we still got 90 seconds, right? So anyways, let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money cannot afford to lose. If I have earned your loyalty and respect so far from this webinar, please show it by going to tradersway.com, opening up a demo account. Download our MT4, test out our execution speed. It's faster than most. Try our spreads, extremely competitive. Contact our customer service, world-class Ritz-Carlton white glove treatment. Let us surprise you. Let us be the prime broker to your successful Forex trading business. If you're not successful yet, I will work with you every single day as a Trader's Way client. I do webinars. I'll work with you every day to help you gain the skills and the confidence that you need. Give us a shot, tradersway.com. Let's get going. So we'll get the news from Trade the News. That'll come out quickly, and then we'll move right into that scalping methodology, both the high volatility event-driven strategy as well as the counter trend. If you don't know what's going on, don't trade. Watch it, and we'll talk about it
September jobs
later.
data in just a few seconds. Minus 33,000, minus 33,000 versus the plus 80 expected. Unemployment at 4.2%, so 0.2 lower than expected. Unemployment, non-farm prior revised to 169,000 from 156,000. Again, September at minus 33 versus the 80, first negative reading since 2010. Only earnings at 0.5%, again distorted by the hurricanes. That's 0.2 higher than expected. The back month rise up to 0.2% year over year. 2.9% for hourly earnings is 0.3 higher than expected. The back month rise up 0.2 to 2.7%. Weekly hours remaining at 34.4 as expected. Participation at 63.1%. Up is 0.2 higher than expected. Canada, 10,000 for employment change is 2,000 lower than expected. Unemployment at 6.2% is in line for Canada.
Negative number. So that's the weird methodology of the government, right? But then how many construction workers are going to get jobs next month? So obviously impacted by the hurricanes. But negative number? That must be a lot of like part-timers, right? So if your Applebee's got blown over, but you know, seems like that's got to be made up next month through construction jobs and so on and so forth, right? I'm a little surprised by that. I knew it wouldn't be big, but negative? Wow. So you'll see we already got a retracement. It already did a 618, but just patience, grasshopper, patience. I know you're freaking out. If you didn't take the super fast scalp, right, then don't worry. We'll catch a retracement on the 5 minute. So just wait. You either control or you're not. You're either disciplined or you're not. You're either hungry or you're not. Peanut butter. Thank you, Trade the News. Man, I sure love doing these webinars with you. Thank you, FX Street, for hosting us. The people at FX Street are kind, beautiful, athletic, intelligent, kind-hearted people with a natural instinct for wholesomeness. And they're Catalonian, I would assume all of them are. Which takes it to a whole nother level. I was telling this story the other day where I'm in an 800-year-old farmhouse with Francesc, one of the founders of FX Street, many years ago. And he was kind. He was showing me a dish, and he's like, yeah, this is how we eat it here. And I'm like, oh, I always love Spanish food. And he went, bah! Say Spanish food! This is Catalonian. I'm like, whoa! Hey now. Okay, Catalonian. I got schooled right there. That's fantastic. And by the way, that was a dinner where there was several professional Forex traders around this table. And I remember I gave my typical speech at the time, how I love the euro and how the Europeans are looking at everything America did properly and they're going to copy that model, but then they're going to tweak it and fix all the mistakes that the Americans made, back in the day. And they have a real opportunity to, really, truly do it right. And all the Europeans laughed at me. They thought that was the dumbest thing ever and that the euro was worthless. And like, no, they could do it right. And, well, they didn't quite do it right. Then there was a time when I thought Japan was going to change the world. The prime minister came out and said, I will do whatever it takes to fix the economic situation of Japan. I will do extraordinary levels of changes, right? And then they got someone at the head of the Bank of Japan to totally buy on. So the Bank of Japan says, we will do whatever you want, and we will go to extraordinary levels to fix the Japanese economy and create inflation. So now you have the head of the government and the head of the bank working together with the goal of creating inflation. Then they replace, through elections and such, the upper and lower houses of the government. So like in the United States, it would be like the Congress and the Senate and the President and the Fed all working together to improve the economy. I mean, they can't even decide where to park or where to eat lunch, yet alone to do all that, right, here in the U.S. So imagine how extraordinary that was. By the way, there's your retracement. Imagine how extraordinary that was. And then, out of the blue, for reasons unbeknown to me, they raised taxes and killed the whole thing. WTF. Like, dumbfounded. Like the dumbest thing I've ever seen. And I like to watch epic fails on YouTube. If I'm having a bad day, if my trading's not going so well, I'm just kind of feeling gloomy, I watch epic fails on YouTube and it's funny. And you see stupid people doing stupid stuff and getting hurt. I love it. Sort of like a stupid person making a bad trade. I love it because it makes me money. But like that is the dumbest thing I've ever heard, to spend trillions and trillions of dollars to create inflation and then jack up taxes. What? So anyways, both Europe and Japan had an opportunity to change the world. Okay, so there's your scalp zone. You need to make your decisions now, right? It either, in your mind, confirmed to 618 or it didn't. Your stop is up here if you took it, okay? And if you lose money, so what? You had an opportunity, you took the opportunity. It's only a scalp. What's a big deal? Okay? That's that. That's called a scalp. If you did it, great. You want me to try it? Let's try it. Okay, so I'll put my stop up here. Beep, 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 beep. I'll put it, boom! And that's that. That's a scalp. Woo! Now we can move on. Great. You can stare at that. Let's do a trip around the world. Let me take another bite. Oh, shoot. Oil collapsed on me. Let me get on my oil trade. I had it at good support, but it was a good trade. Lost money. I guess we can cover that. So 2-3 days ago, maybe Tuesday, 3-4 days ago, I had a trade plan to buy oil here. I'm going to buy oil here. First one's collapsed on me on the news, and I don't want to be exposed to that risk, so I lost 25 cents. So anyways, so the next one's going to be down here at 49.30. You can see it's a cluster of weekly and monthly pivots. Great. So maybe I'll think about doing it again there. Now, there's a good chance it'll turn around and pop up, but it doesn't matter. I don't want to be exposed to the risk, and I don't guess. Brent's holding. Yeah, but I'm exposed to this risk. I don't care. My job is risk management. There's risk there. I don't like risk. No, but Brent, I don't care. After NFP, my job isn't to hope, right? I'm not emotionally attached to that. So I took a 25-cent loss, Crimea River. So if it turns back north, I can always trade it like a range for a little bit. Trade it like that's bottom range. Trade this like a top range, wait for a breakout. Or I can just do like my plan on Tuesday was the other opportunity is buy it here at 49.32. So I'll look for that. And probably will come down to 49.32. I'll catch the M2 WS2. MM2 WS2, boom. And that's a long out every day of the week as long as I can get the pattern. So just trade. Any other questions? Yeah, Cleveland beat the Yankees last night. Is that right? A friend of mine at Harvard played for Cleveland for many years. He's probably like hanging out in the locker rooms and stuff at the games now. All right. Kitty cat, kitty cat, kitty cat, kitty cat, kitty cat, kitty cat, kitty cat. Great. So like I mentioned, I work with Traders Way clients every single day. So a lot of these trade plans are just trade plans that we've done over the last few days or last couple of weeks. And you say we have a great price action move here going here. Higher high, higher low, buy. 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 Higher high. Whoop, whoop. This red zone in here, I don't have a drawing tool, so this zone in here, I would plan on being the top. Even though we've had all these double bottom, I mean, it goes all the way back to the double bottom. Double bottom, higher high, higher low, higher high, right? Double bottom, higher high, higher low, buy. 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 Higher high, probably higher low, buy. Higher high, take profit on all 19 trades, and you're done. Yeah, Carlos. The one thing about Harvard, I don't know if anybody knows this, but it's all about the network. Okay. Woo-wee! And so that's a little price action. Odd. Just looking at this. So, what are all these colors, you might be asking? This red zone is the predicted top for the month of September. This red is the predicted top for the month of July. This is the monthly support. So, you know, this month wasn't that great. Oh, it's August. So even though that didn't work out very well, it's predicted, or was predicted, the technical analysis wasn't going to be amazing that month, and that you shouldn't be making longer term, or especially in the first half, let's say, that you're going to be making shorter term trades. The other part of that month is you're going to be looking for this pair from going down to going sideways to going up. Is there anybody here in this chat room that can confirm that at least a month in advance to all of this, we were preparing specifically the third week of August to see a bottom in the retracement Aussie yen, and that we would start to go long? Can anybody confirm that at least a month ahead, maybe 2 months ahead, maybe 3 months ahead, maybe 5 months ahead, maybe 6 months ahead, we were talking about this happening? And in fact, it was specifically the third week of August, which is here. In fact, I did on December 21st, 2016 at FX Street, I did a 1-hour interview. I was in the Caribbean, there's a volcano behind me, and I did a 1-hour interview with FX Street. The other speakers all bailed. They were too busy doing stuff. I was in the Caribbean on my way to meet with the central bank, and I made the time. I don't know what was going on with the other guys, but I made the time. And I said in that interview that even though I'd been buying the Japanese yen pairs all for like 3 months straight, that I was about to dump all of them, maybe that day, but definitely very, very soon. And then that the Japanese yen would get strong and I would sell that for at least 3 weeks. Then there would be a false rally, which I would sell that. And then this would drop down into, I don't know, March or April. And then I got to worry about repatriation issues. And then blah, 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 blah. And around the third week of August, I'm going to plan on buying all the yen pairs again. Boom, 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 boom. Thank you, moderator. Bravo, 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 bravissimo. Bravo, bravissimo, bravo. Yeah, great. Best moderator ever. So anyways, so that's that. So guess what? If this is going up, I don't know if it's going to go up. If you're a bull, fundamentally, you want this to go up. Great. So where's the predicted support for this to go up? And in the book I wrote 8 years ago, I would say specifically this price, 87.44. To the exact pip. Exact pip. Exact pip. I don't know if that's going to be our bottom for the month of September, but that's where I would say. And guess what? It just so happens at the moment to the precise pip, to the fraction of a pip, it's precise, has held. So maybe at some point you start looking for reversal patterns in here if you fundamentally want to be long Aussie yen. Amazing coincidence that it was the exact pip. Or maybe it's not a coincidence at all. So this is a pretty slow scalp, huh? We're getting pretty close in the line in the sand. I'm supposed to move my stop. I'll move it closer, but I won't move it to break even because I'm just not that profitable yet. So I'll get it down to, I cut my risk in half now. Yeah, see, this stinks. It's too slow too, huh? Yeah, I don't like it. If it was me, I'd get out. So anyways, swing trading, huh? Maybe we'll get one. Monthly swing. If I bought that Aussie yen, I'm not telling you if I did or did not. If I bought it, I can tell you my target is either Thanksgiving or Christmas. It's not a price. And by Christmas, I'm hoping, now here's part of the hope, I'm hoping to hold it to January 1st. But my concern is what happens around Christmas. If the market bails at Christmas, I'm going to have to bail. But I really want to bail in January. It has to do with taxes. And these things matter. I know you're probably not tracking them, but these things matter a lot to the market. So anyways, this is the 1,000 pip move, I think. Is it pound yen or pound dollar? This is 127, yeah, to 137. Okay, this is the 1,000 pip move. I spent 3 days setting up. So over the course of 3 days, maybe 20 minutes per day. Are there any Traders Ways? Is there any Traders Way clients here that can confirm that we must have spent 20 minutes a day for 3 days setting this up when it was still falling? Well, there's a bit of a delay in the chat, but let's see if anyone's here. And then I'll go through it. It's kind of hard because I have to back out so much now. I'll remove some of this. Okay. The part I want you to notice, okay, let's get rid of this. The part I want you to notice first okay, Jim says yes, Henley says yes, Peter Ward said yes, Goodness said yes, Raymond said yes, George or Jorge says yes, Raymond says indeed. All right, quite a few people confirming, right? Right? Quite a few people confirming. Wasn't guesswork. We spent 3 days setting up a 1,000 pip move. Okay. It started here with these triangles. Okay. So we were still falling. And some of these triangles are not perfectly correct and accurate. If you look really close, I have this triangle coming here and it came down before going up to that level. And you say, well, Wayne, why isn't it correct? Because I drew it in advance. Okay, I drew it in advance, 3, 4, 5 days. That's basically a week worth of trading. I drew before it happened. Okay, so this had occurred, and what I was showing you is down, 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 up, up, slight retracement, not perfect. Down, 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 up, 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 up. Okay, the second part of this is, it looks like it's support now, but it was support back then for different reasons. This is this month's pivot point, which uses the low and the high of the month to calculate the new pivot. So it looks like back then, back in the 3rd week of August, that it was actual bottom, but it wasn't. Not this line. It was a different type of bottom, different monthlies, different weeklies. But anyways, it was a very predictable bottom that produced a higher high. How many higher highs should exist in a downtrend? Niet! Okay? So I'm like, wow, this is important information. The second part of it is I had talked in December that the 3rd week of August, I'd like to get long yen pairs like pound yen, Aussie yen, but this is similar because dollar typically will weaken too. Swissy will typically weaken too. They're funding pairs, all this kind of stuff, right? So taking a look at this, this was predictable at a predictable place on the chart, but at a typical time in the seasonality and business cycle of the U.S. economy. To the point where I talked about it 6 months in advance. it might sound hocus pocus to you. I hope you walk away with the understanding that if you do throw yourself in technical and fundamental analysis, that you can learn this, and that you don't have a crystal ball, but you can make a lot of predictions that are reasonably accurate, and then you can confirm it using technical analysis and put yourself into trades. It's not hocus pocus. That you can literally do the analysis and make the trade. That it's not a random walk. That, right? That there is a true science and understanding and logic intelligence behind all of this. And if it's logical and intelligent, you can learn this. And if you can learn it, you can do it. That's what I'm trying to get across. Right? You don't have to be a genius. Like I said, I think everybody at Harvard's got to be smarter than me. But I'm a gosh darn hard worker. And I'll out hustle you any day of the week kind of thing. That's where I get it from, right? Sickening. How does it go? What's the sickening? No. Oh, ridiculous, sickening work ethic. That's the quote. Ridiculous, sickening work ethic. And if you got that, I'm sure you can learn all this, okay? So anyways, putting all this together, you would assume, or you'd actually be sitting there looking for a higher high. Doesn't look much like it's very important, but I freaked out. I freaked out, totally freaked out. Spent 3 days setting this up. Well, if that's true, then blah, 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 blah. And you can see I guessed this off the roll reversal, and then guessed the extension, so on and so forth, okay? What actually happened was slightly different, but it's not going to be perfect. But the entries are perfect, and re-entries, and targets are pre-identified. And then you can see there's follow-up trades. But nonetheless, after 3 days of setting this up, it went from the bottom is 128, and it went to 138 something. So let's just call it 1,000 pips. That's pretty lucky to pick the exact week 6 months in advance, pick the exact price, pick the exact higher high, higher low, because the whole thing is if it's still a downtrend, but it bounced off support. So what happened if it dropped to support and then created a higher high? Well, all the bears took profit. They got out. They're dead. And any bulls like me sitting around looking for seasonality moves based on global money flow would be then looking for the higher high to confirm the potential roll reversal or change in trend, but then would be setting up the higher low 1, 2, 3. Which is essentially an inverse head and shoulders. If you want to call it that, call it whatever you want. Just get in the trade. And then magically, oh my God, 6 months in advance, predicted the exact week 1,000 pip move would happen? Oh, well, great. That's amazing luck, in my humble opinion. So I know you can do this if you had the right guide. Not somebody that just read someone else's book. There's a lot of guides that just like, read 5 or 6 Forex books and now they're Forex experts. Nobody taught me. That's my beard. Nobody taught me because there wasn't a book on Amazon. Actually, the truth is there was one book on Forex. It was called Forex Made Easy. And it was a scam thing. So the only stuff out there were scumbags and scam artists. So I'm like, I got to figure this out on my own. And like I said, through ridiculous, sickening work ethic, aka Will Smith, right? Out of ridiculous, sickening work ethic, and really, because I'm an entrepreneur, I'm too stupid to quit. Honestly, I'm too stupid to quit. So like in that previous story I told, ran my company into the ground simply because people didn't pay me, but I kept paying my employees. Then I started selling things. Then I started giving things away. I gave all my stuff to the employees. And then one day, locked the front door, slid the keys, and walked away dead broke. 2 years later, $1 million a month. And that company, by the way, that I found that was dead broke, living on bankrupt credit cards, not a chance in the world because the .com industry bombed. It was a time when people were crossing off .com on their business cards. There's no way in hell they could have raised money. They had a half-decent product, 800 beta testers. They sent an email like, please pay us money. Nobody paid money, like 3 out of 800. So they're like literally on the verge of bankruptcy. I'm like, no, I'll do it for free. I want a piece of the money coming in, and I want part of the ownership. That company is still a leader in their industry. That was 20 years ago. I could have just left them there to die. That's cool. It's cool. And it's a company that makes the world a better place. So as soon as I got that company up to 300 or 400 employees, I quit. Found another company that had to be rebuilt. They just lost like literally half the company. Walked in, boom. Year later, company had full staff, rocking and rolling, but or moved into like 20,000 square feet of a beautiful office space. Made me vice president. Great. Another huge success. Boom. Quit that, became a Forex trader. It's cool, man. And here's it. This is it. And it's fun. Love it. I don't do trade shows anymore. I don't write for magazines anymore. I don't go on TV anymore. I just hang out at my house. It's great. Sit on back deck, smoke cigars, drink coffee. I'm a full-time, well, I'm a degreed student at Harvard, so I spend hours and hours and hours every day reading, writing, researching, going to class, going to study sessions, and trying to be a good dad, trying to be a half-decent husband, trying to be a good friend to my friends, trying to help people a trader's way. Full days, man, but I love it. You know, all it is sickening, ridiculous work ethic. That's all it is. Art has a good question. Bond yields and bond. So we can get super into that, and I don't get super into that. But I'll tell you a funny story. There was a time in the world when the world was normal. There was, believe me. And there, I had this, like, I used to give this big speech about how the 10-year T-note could never drop below 2%. I swear to you, it's funny. And I used to go into this conversation about Newtonian physics and stuff, and I'll spare you. I'll spare you the long version because it's been since proven. How many years was the 10-year T-note below 2%? But this was when it was crashing and it was the end of the world. This must have been 2007, 2008, 2009 or whatever. And I'm like, there's no way the 10-year T-note could get below 2% because it's impossible. Newtonian physics explains it. I'm like, you know, you got this bond and that bond and blah, and they're all synced. And so my theory was if the 10-year T-note dropped below 2%, the 30-day would be negative. And you can't have negative. We were negative like for 10 minutes. I think it was like 2008, 2009 maybe, somewhere in there. We did go negative, but like for a split second, and that was probably the bottom. But nonetheless, the 10-year T-note was quite a bit below 2%. So spreads and yields and stuff. I'm gonna isolate that to just yields, okay? Because if you get into the 210 spread, if you get into the TED spread, I mean, again, sort of in that period, 2007, 2008, I did the Traders Expo in New York, and I did a big analysis. There were so many people in the room that the fire marshal had to kick people out. But I had this giant room, and it was filled and stuffed with people, and the door was blocked and all this kind of stuff. And I covered the TED spread, which is essentially a spread between short-term and longer-term, right? The VIX, which no one even had heard about at that time, and yield curve analysis. The yield curve. And I explained in that 1 hour how an idiot could predict, but certainly, identify the end of the market based on these three things, and that none of the people in the room had to lose 40% of their net worth. And it went ice cold. See, says chilled. It was like, I just explained in less than an hour how any professional money manager with like a 5th grade degree, a 5th grade understanding of stuff should have been able to identify through basic analysis that it was time to at least hedge, at least protect, maybe take some profit on some things, maybe move some money to the bond market, but it was predictable. And so, and people were just like stunned that because they got it. They totally got it. And they're just flabbergasted that their money manager with their MBA at whatever big firm called them on the phone and said, just ride it out. Just ride it out. Now's not the time to get out. That's market timing. We have a long-term bit. And you're like, you son of a... You should have seen this coming, right? So anyways, so I can do this, right? I can do this. I don't want to get into spreads a bit because it can get wonky. But let's just talk about bonds. And a lot of people will tell you the stock market's going to fall because the Fed's raising interest rates. Now, if you go back and look in history, that's not actually true. But like most people, what they're babbling about is totally wrong. Because some guy on TV told him or her. So the reason stock market's going up for the longest time was the only thing to do with your money. Since the Fed, let's say, even before that, let's say, the Fed was buying bonds, okay, and interest rates were falling, and the stock market was going up. But that's what quantitative easing was designed to do. Great. So people were buying bonds, and people were buying the stock market. And the reason for that is Europe sucked, the emerging markets sucked, everything sucked. Except the United States of America, but it is the largest economy in the world. It does have a mature market. It does have a legal system and a regulatory system. Yeah, okay, great. So it's a place where you put your money. Now, the bond market is great for many reasons, but in particular, the Fed was buying the bond market, so you could buy the bonds and then sell them to the Fed. Now, by you, I mean your account at Goldman Sachs or JP Morgan. Okay, these are prime dealers of bonds that can buy bonds, let's say treasuries, from the Treasury. Because get this, during quantitative easing, the Fed bought treasuries, but they don't buy them from the Treasury. Wayne, hi, how can I learn from you? Become a client at tradersway.com, and I do webinars for an hour and a half every single day. That's how I can help you. Okay? And you're looking for a mentor, you could possibly hire me, but I'm way too expensive. So we'll leave it at that. If you got lots of money, then you can hunt me down. Wayne at fxbootcamp.com. All right. So here's the thing. Quantitative easing is supposed to increase money supply. If the Fed bought treasuries from the Treasury, right? The government says, here's a treasury, and they sell it to the Fed, then the money would go from the Fed, which is basically a government agency, to the Treasury, which is a government agency, and it wouldn't enter the money supply. So what they do is they call up JP Morgan, they call up Goldman Sachs, prime dealers, and say, hey, it's the Fed. It's Ben Bernanke. What's up? What's up? Right? I need like 80 billion in some treasuries. They're like, not a problem. So what they do, then JP Morgan, right? Jamie Dimon calls the treasury and like, hey, we need $78 billion worth of treasuries. They're like, hey, no problem. So JP Morgan sends them the money. Now they have the treasuries. Then they call Ben Bernanke up. They're like, yeah, I got your 80 billion in treasuries. Did you notice that Jamie Dimon only paid 78? So then they front run it and sell it to the Fed at a higher rate. But the Fed then takes the 80 billion. Didn't cost them anything. They just click some keys on a computer. They did not print money. Remember how they tell you the Fed just prints money? That's stupid. The Treasury prints money, not the Fed. So again, stop listening to people. People is stupid. So the Fed creates it electronically and says, there you go, JP Morgan. We just wired you 80 billion. Woohoo! 78 went to the Treasury, which just pays for everything. But now we got this leftover money. And then that enters into the money supply and all that kind of stuff. But through the money multiplier of a bank, that 2 billion gets multiplied into 20 billion and so on and so forth. Okay? It's really cool stuff. That means if JP Morgan's buying bonds and selling them to the Fed, there's an inherent buying market. The market is rising. Because JP Morgan might buy it from someone else and then sell it to the Fed. They don't even care. Okay? So, the Fed is buying bonds through their prime dealers, like JP Morgan, like Goldman Sachs, and like a few others. I think there's 11. Anyways, so they're buying, right? Bond market's going up. What did quantitative easing do to interest rates in the United States of America? Interest rates fell. Do you think the stock market likes free money? And what if you're a billionaire in Malaysia, but you're worried that the government's going to steal all your money? Or you're a billionaire in China and you think the government's going to steal all your money? Or whatever, you get it? What do you do with your money? You deploy it to the United States, buy some treasuries, buy some bonds, buy some stock in the stock market, because at least you're buying buying it in reserve currency, and you're buying the largest economy in the world. Certainly better than emerging markets and stuff when capitalism might come to an end. That's what was happening at that time, right? So anyways, interest rates were falling. Money was available, free money being pumped into the economy at unprecedented levels. Free money, free money. So the stock market went ape crazy. But they'll tell you, it's quantitative easing is designed to increase the value of asset classes. Save the real estate market, save the stock market. That's what happened. So as buyers in the market went up, interest rates came down. Buyers of bonds and treasuries. As the demand went up, prices went up, but yields fall. Okay. So now we're in this world of the Fed is normalizing, they're raising interest rates, and they're thinning their balance sheet. What does that mean? You probably read about this. They're starting in October. Well, what is it that they're doing when they're reducing their balance sheet? Well, they bought all these treasuries. And they ended up buying like mortgages and all kinds of random things that the Fed had never bought before. But it was extraordinary times, which required extraordinary measures. Well, we don't have extraordinary measures anymore, right? We're not doing quantitative easing anymore. We need to normalize interest rates, but then there's this like multi-trillion-dollar balance sheet holding things like mortgages and stuff. So what they need to do is sell them. And it's the same kind of mechanism. So when they wanted to raise interest rates, they had to go into the open market right, operate in the open market operations, and buy bonds, and buy treasuries, and buy mortgages just like anybody else, driving prices up. So now they're like, we're going to raise interest rates. How do they raise interest rates? It's not a law. They do open market operations. To raise interest rates, you have to do the opposite of what you did. Sell bonds. So they sell bonds. They drive down prices because now the market's falling. And when prices fall, interest rates rise. That's what the Fed wanted to do. But they're like, we're only going to raise in December. Great. And then we'll talk about it early next year, maybe 2-3 times next year. Great. But then they did say, well, if starting in October, we will start to thin our balance sheet. What does that mean? Selling more bonds. Isn't this interesting? So they're not raising interest rates, but they're going into the open market and they're selling bonds. That smells a lot like raising interest rates. Right? So I think it's very interesting. So if you had, let's say, $1 billion portfolio in bonds, and you knew for a fact the Fed was going to come in and drop prices in the entire market, what would you do with your money? Would you stay in there? I mean, I'm assuming you trade bonds. You're not holding bonds to maturity and that kind of stuff. You're a bond trader. What are you going to do when you're pretty much guaranteed the bond market's going to fall? Well, you might want to get out of bonds. So you're going to sell too, which then raises interest rates and yields, more particularly on like corporate bonds, 10-year T-notes, 20 notes, 30-year notes, not just short-term stuff. And effective interest rates will be going up. Even if the Fed funds rate stays relatively stable, all the other rates are going to go up, which means the bond market across the board should be falling. Well, knowing this, shouldn't you just start selling bonds? But what else will happen? And this is where I'm getting to. I know it's long, but I need you to understand. The guys on the TV say, the Fed's raising interest rates. That's going to kill the stock market. We're at all-time high. This thing's going to fall. This thing's going to crash. It's the end of the world. But it wasn't the same idiots that told you that in 1993, 1994, 1995, 1996, this .com can't keep going forever. You should short sell into the tech industry. 1997, 1998, 1999. Like, dude, you're short selling into things that are going up 1,000%? And they're telling you, so, I mean, it's sky's falling kind of stuff, right? So the Fed's raising interest rates, and interest rates are going up across the board because the bond market is falling by design of the Fed, but also because we probably had the largest bond rally in the world because global stock markets around the world were collapsing. Plus quantitative easing from pretty much every central bank having a zero interest rate policy, a big ZIRP, right? So now that we're reducing all of this and the bond market's falling, where are you going to put your money if you're a billionaire? You're not going to buy bonds. The bond market's crashing. Real estate, stock market. And you're like, whoa, but valuations are way too high in the United States. Oh, I totally agree with you. But it'll probably still go up. But now the stock market's going to go up in Europe. And then the stock market's going to go up in emerging markets. And then the stock market's going to go up in Canada and Australia. And all this money is going to be deployed. And it's just going to move from bonds into stocks. And everyone's going to say, oh, but the interest rates are going up and then it's going to be the end of the world. And oh my God, you're going to short the stock market when it's the only thing in the world to buy, except for real estate and that type of stuff. But when we get to a point where interest rates are so high, they strip out profit margins so that corporations cannot be profitable, then you start to prepare to sell the stock market and prepare to move back into bonds, but not until bonds are cheap. Doesn't it make sense? I think it makes sense. So I want you to watch that. Okay? Watch interest rates go up and down. It matters. We should go back and see if the if Fed Watch changed. Hang on. Fed Watch, CME. Cool. Hang on. Boop, 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 boop. Did it not update? Oh! This was 84 or something, wasn't it? Was it this number before? It's 91.7% chance the Fed's now going to raise interest rates in December. I thought it was a little less than that, so it must be real time. November hasn't changed. That's what threw me off. November didn't change at all. It's still 1.5. But I think this was high 80s, but now it's like 92% chance the Fed's going to raise interest rates. And if you throw this in here, somebody thinks the Fed's going to raise by 50 basis points, not by 25 basis points. So if you add that, so I'll show you my Harvard brain. That's 92, 93, just over 93%, 93.1% chance the Fed will raise interest rates in December. So it did go from 84 to, yeah. So it's even more baked in now. But these people are pricing. They are pricing negotiations today, because you have to understand like the future value of money, right? This is like basic finance stuff. Now we're talking about the flow of money over time, money, cash flows. And you have to discount into the future. And one of the things you discount is, well, if let's say I'm going to loan you money for 6 months, but I think interest rates are going to go up in December, why would I give you today's rate? I'm like, dude, but the Fed's going to raise interest rates. So I'll just wait. Maybe I'll lend you the money after the Fed raises interest rates, but I'll lend it to you at the higher rate. And then the borrower says, whoa, 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 dude, I need the money today. And you're like, yeah, well, I'm not going to give you today's interest rate if I know just in a couple of months it's going to be higher. All right, well, I'll tell you what. And then you work it out. We'll price both in and all that kind of stuff. And you negotiate to compensate at today's rate and the next rate and over time, and that should add up to that, and you come up with a price. That's how it works. So that's very, very smart people negotiating trillions of dollars. It's incredibly liquid. It's real money. And they're real negotiations, not sentiment. It's not a feeling. This is money being negotiated in real time. And based on what just happened, even more people are certain the Fed's going to raise interest rates in December. Now, you could use that tool and try to calculate how many interest rates are being priced in, not guessing. See, I don't like it when you get a guest on one of these TV stations behind me, and they're like, well, we think the Fed's going to raise 3 more times in 2018. Like, what do you mean think? I don't care your opinion. Based on the Fed funds market, the market is pricing in 3. And I can tell you that they're most certain with, March, June, and whatever, right? And that's more important. An opinion, don't care about it. The opinion of the entire market, and it's not even sentiment, right? Like, it's not like someone is scanning through magazine articles to figure out how the industry feels, or going through social media. How does the industry feel about this non-farm payrolls? No. $10 trillion today, what was negotiated? What is being priced in? That, to me, is much more important. So check this out. Here's another key level that you need to pay attention to. Let me make sure this is legit. I mean, this is pretty legit. Here's another level. We got a monthly in here that's pretty important. Weeklies we've already blown through. So this is you can see this trade here didn't work. This was Tuesday's trade. See, Monday we dropped into the weekly target, and most of the time If you hit the weekly target early in the week, it retraces back to the central. So we were setting up a trade like that, and it tried to make kind of a higher high. And then I said, well, if it made a higher high, you want to set a higher low. And it looks like, you know, monkey brains now. I can't zoom in any further. I mean, we could try to go back this way. Oh, I got to turn that thing off. No, wrong one. Okay, so you can see I'm like, well, maybe this is a higher high than that high. Not quite, right? But the idea is up, down. So you're treating this like a double or triple bottom. Higher high, higher low, and maybe gone back to the central. But the most important part of that is this gray area that I've highlighted. Let me re-highlight it. Highlight on top of the highlight. Okay. What I'm suggesting in this period between this dark line and this dark line is that is supposed to be the bottom. It doesn't have to be, of course, but using technical analysis, I knew Sunday night or Monday morning when the market opened that that was probably going to be the bottom for the week. And that would be where you'd probably want to look for a reversal. Set it up, and it didn't happen. Cry me a river. It's just technical analysis. It's not like I have an opinion. Okay? But now we're down here, daily target. This is a monthly support pivot. So if we can get down a little bit lower, it would be interesting to see what happens next week. Okay? But, you know, so even though it didn't work out, I hope you understand the logic of the setup. I think I took that and lost money. Didn't lose a lot of money. Wayne, do you still have the fundamental cover? Oh, yeah. Yes, the fundies course, yeah, is still at fxbootcamp.com. Yeah, so that one, the one that Ryan's talking about, I teach you about all these things about like money supply, the calculations that the Fed does. One of the things I teach you to do is manage the balance sheet of a commercial bank, the assets, liability, and bank capital. And then we look at things like there's a large withdrawal from one of your depositors. How do you manage your balance sheet so that you can meet the reserve requirement ratios of the Federal Reserve Bank? Or if a large deposit is put into your account, how does that affect your liabilities, your assets, your bank capital? More important, what do you put into the Reserve Bank? And how does that multiply through the economy, shifting the money supplied curve, right? Do we do the demand curve stuff too? Money demand? Anyways, like typical stuff, we're shifting supply and demand curves, which then change the quantity of money as well as interest rates. So all that's covered in the fundamentals course. So yeah, if you want to know the big stuff, it's not like what does ADP jobs report mean. It's literally how does global macroeconomics work from a central banking policy? What is money, et cetera, et cetera. So for that, you need just go to fxbootcamp.com. So here's a second wave move. We're back into the sweet spot, I guess it is. It's made a full 786. And this is basically the 5-minute move I talked about earlier. So we'll see if that works any better. Okay. It's just a second cycle. But this tells me it's pretty weak, so if we get down into a pivot cluster kind of like down in here, maybe even the first one, you should probably consider bailing on it. Because I think there's something down there at that lower one. Cool. Oh, let me fix that. This isn't quite ready yet. Oh, we're getting close to my pivot cluster here, huh? Now, the other thing as a bull I got to be wary of is you see how we've made another lower high, lower low? This might be significant. So I'm not going to drop down a working order there. I need to pay attention here because I don't want to be buying in a downtrend. Okay? So I got to be very careful. See what time frame I'm watching and all that kind of stuff. You know, yeah, I got to be careful. Let's see. I need to look at this maybe as support. Kick it off the 55. The 55 tells me up and then down. The other thing you have to worry about is, check this out. And I did cover this for Traders Way clients 2 weeks ago or something. But check this out. If you're a bear on oil, that is your monthly swing short if you're a bear. And the target for oil is back down to 46. And if that's true, that really screws up some of my macro stuff because that's bad news bears. So what I'm hoping is we don't go that far down. What I'm hoping as a bull is I buy it at this M2. And I said last month, and I'm sure there are people here to confirm this, that oil would go from 45 to 55. Well, it went down to 46 and then went up to 53. So pretty close anyways. What I'd like to see is it heads up right here. So we dip down to maybe 49. And then we move from 49 to the new target, which is $55.25, which would make me a supermodel because it's all based on last month's predicted low. I said 45, it was 46. But at that time, I said it would go from 45 to 55. Well, the conservative bullish target for the month of October is 55. The only thing is you got that number 8 weeks early. Is that neat? Stock market just opened. Ding, 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 ding. All right. What do you want to do for the next hour? You like my shirt, by the way? It's nice, isn't it? Feels good. A little too serious. Oh, I got my nice leather shoes on, and I got ripped jeans. Yeah, but that's the life of a currency trader, bro. Take care, Ryan. So remember, anyone that opens a demo account or a live account at tradersway.com, in your back office in the top right-hand corner, there's a button called Webinars. If you click that, it takes you every Monday through Friday at 7:30 a.m. and logs you into my webinar. Please visit Traders Way today. And you can have a piece of this loveliness for over an hour every day for free. I know, that sounds great, huh? What do you want to talk about? You want gold, huh? Gold. You want to do some gold, huh? Yeah, let's do some gold, bro. Let's see how complicated it is. Let's see. Oh, let's even go farther back. Let's try it. Let's see how complicated trading is. Up, 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 down, down, buy. 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 Up, 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 down, 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 down. Up, up, sell. Down, 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 down. Up, up, sell. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 down. Okay, isn't that nice? It's aggravating when I do stuff like that, right? Because you're like, Wayne, it can't be that easy. Why not? Right? No, I do not trade Bitcoin. I live in a rich country. I don't know anything about Bitcoin. I'm not a drug dealer. I'm not a money launderer. I'm not in a poor country where I'm worried my bank's going to rip me off or my government's going to rip me off. So I just have piles and piles of cash deployed into the marketplace. Okay. Why not? Why not that easy? That's a question for you, isn't it? So like identifying things like trend. 2155 crosses, which I mentioned before the news came out, before NFP. Here's the fair market value of the 200 EMA. That's where bulls and bears agree. So technically, if price is above the 200, it's bullish. If it's below the 200, it's bearish. Now, there are clues along the way that make it more obvious than that. Things like pivot points. I love pivot points. The reason for it is they're predictive. They're not lagging. They're leading. They're leading indicators. Right? So here's weekly pivots. It said, if you're a bull, this is the bullish target for the week, but you can see we're in a downtrend. Or if you're a bear, this green zone, which we are hitting now, is the predicted bottom for the week. We knew that on Sunday afternoon in New York. But let's just say Monday morning, wherever you are. Monday morning, markets open up, and we're like, oh, well, we're bears, so price is going to fall down to 1250. 1252. That's the aggressive low. The conservative low is 1260. So you're like, this is dropping to at least 1260 this week. Done. Well, guess what? It just did it. Yeah, but it did it last week too. Oh, and it did it the week before, but it actually fell a little further. And it did it the week before that. Well, if you're in an up market, right, the pivots are predicting the top of the week before you even started trading. This week it did it, that week it did it, that week it did not. That week it did, that week it did not, or that week. But this week it did, and that week it did. So it's not perfect. But remember, nothing on this chart is telling you what to do. You need to do your analysis. And you need to figure out what to do. These are guides that just tell you probabilities of maybe, let's say if you're in this red zone, it doesn't mean it's the perfect top. Or if you're in this green zone, it doesn't mean it's a perfect bottom. But doesn't it look like most of the time it's pretty gosh darn close? Like this went a little higher. This went quite a bit higher, but then returned back to it. But it's mostly pretty accurate. So shouldn't you probably take profit in those areas? Yeah, it doesn't tell you to be bullish. It tells you if you're worried about the probabilities or if you want to incorporate the probabilities into your analysis, well, that's what that does. You should probably take profit in this red zone. You should probably take profit here. 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 Oh, well, it took off and left you hanging. Yeah, but you're still got the money in your bank. And the thing is, if you took profit and you know you're a bull, because that's why you were long in the first place, what's your next thing? If you're out because you took profit, what's your next thing? What's your next gig? Looking for the dip. Buy the dip. It's not hard. You're a bull. It's an uptrend. You just took profit, bagged some money on a Thursday, did nothing on Friday because you're out volunteering at a museum or you're sitting on a board of directors or something. And then Monday you're like, oh, I can't wait for a pullback. And it doesn't even pull back till Wednesday. So you did nothing on Friday, nothing on Monday, nothing on Tuesday, but on Wednesday you're like, oh, I finally got my pullback. Buy. You bought a higher low in an uptrend. You're a genius. You're an unbelievable genius. The reason people can't do it is they don't have the patience or the discipline. Or they don't know they're a bull. They change every day. Are you a man or a woman? Well, I don't know. I haven't decided yet. I'm sort of in between. I'm making, what month is it? Yeah, I think it's October. I'm a woman every October, right? I mean, dude, are you a bull or a bear? Decide. I mean, what is it? Are you a man or a woman? Are you pregnant or are you not pregnant? The rest is easy if you've made the decision. Right? Cause and effect, it really helps. Are you pregnant? Yes. Guess what? You probably have a baby. We should probably prepare. You should probably stop drinking alcohol and smoking cigarettes. You should probably get a doctor. You should probably marry his butt. Get him to man up. But like, it's probably going to happen, right? You got to. So are you a bull or a bear? I'm a bull. Great. Good. Nice. Let's do some planning. We're buying low. We're looking for a higher highs, and it will continue until it stops making higher highs. Like this week. This week you might have lost money, but look, this month or this week you made money. 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 Holy crap! You lost money, and the trend is over. Stop trading at the very least. Lower low, lower high, 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 higher low, higher low. I mean, right? You should freak out if this seems simple to you, and yet when you're trading on your own, it's complicated. You should just freak out. Like, get up, throw your table, kick your chair, and get emotional. You need to change your behavior. If you traded that and lost money and now you look at it, you're like, oh my gosh, how could I lose money in a thing that just keeps going up for 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row? And you didn't make money. These are 4-hour candles. Yeah, I only had like 2.5 days to set this up. But you might say, Wayne, in 2.5 days, I'll probably change my opinion like 19 times. Well, maybe you're stuck in the weeds. Maybe you need to back out a little bit. Maybe you need a strategy, not just running around tactically, like a chicken with its head cut off. You're just making a bloody mess of everything. If you had a bullish strategy, because you did some longer term analysis, or God forbid, some fundamental analysis, then for 9 weeks you would have been a buyer. And then you made a lower low. And I'm pretty sure that this was a very predictable level last month. I'd have to change all my pivots and stuff. In fact, you know what? Let's do it. Let's do it. I'm going to do it. Let's do it. Pivots monthly. Oh, snap. Let's see. Is this the right one? Yeah, it is the right one. Okay. That was the predicted high for the month. Okay. Check this out. Predicted low for that month. Predicted high for that month. Predicted high for that month. Yeah, all right. So we missed it by $5 or $4. Pretty accurate stuff in my humble opinion. Predicted high for that month, predicted low for that month, predicted high for that month. Okay, so we missed it again by about $5. Predicted low for that month, predicted high for that month, predicted that high month. I mean, look, it's like, oh my God, this is so straightforward. Right? This, Honestly, you should stand up, throw your chair, and just go, wah! Dang! I think I can do this, but I gotta change my evil ways, right? Like, oh my gosh. Now here's the interesting thing. We almost hit the M4, which is the actual target, but this is the R pivot. That's the only resistance pivot well, that's not true. There are two resistance pivots, this one and that one. That is the R pivot. Do you remember that counter trend trade I talked to you about earlier? I said it hit a target early in the week, so it should counter trend trade back to the central pivot. But in that case, it didn't. I think it was the pound dollar. Remember? It hit the weekly target. And I'm like, but it did it on a Monday. So I thought, you know, my trade plan on Tuesday was to long it back to the central, but it failed and I lost money. Check this out. Early in the month, hit the target, went back to the central pivot. That's the counter trend trade. I only have 2 counter trend trades. That's one of them. Nice. Look at this one. Again, hit it in the first week of the month. And by the end of the month, back to the central pivot. That's one of my 2 counter trend trades. Oh, snap. Is that killer? Inside week, or in this case, inside months, if your R is your top, your S is the predicted bottom. Check that out. It was 1 day late. 1 day out of an entire month. The next day it hit that price. All right, well, I'm sorry. Okay. Killer, right? Killer. So maybe, just maybe October comes down to this area, and early next week we start looking for a counter trend trade. If gold goes up, what do you think will happen to the dollar based on intermarket correlation? Oh snap, that sounds complicated. If gold goes up, what's going to happen to the dollar? I do this because there's a lag in the chat, so I don't know how slow the lag is. Maybe I should refresh. I think you're responding to stuff I said a half an hour ago. I don't even know what your dynamite killer. Okay, good. No, it's good. Henley says go down. Jorge says down. Matthias is down. Okay, good. Good. All right. So that means pound dollar up, euro dollar up, Aussie dollar up, USD CAD down. What does that mean for oil prices? Okay. What does this mean for the Japanese yen and Swiss franc? See what I'm doing? I don't know if gold is going to reverse its current downtrend that it's been in for 5 weeks. I don't know. But I know the price where I would expect it, and I know my behavior on about 19 trades if it does. So it's a big if. But if it does, and I validate this fundamental hypotheses using technical analysis, then I have 19 responses in which I will try to make money. Or I can just like walk into next week and just, I don't know, try the London breakout strategy. I'm going to be a millionaire. It's going to break out and I'm going to buy a pullback. I'm going to make 22 pips and then I'm going to buy a Bentley like that kid on YouTube. Look at me. I have the London breakout strategy. I'm so rich. I don't understand why people don't find that retarded. Like, you don't want to do the work? You want to be a professional money manager, but you don't want to do the work? I was actually talking to a billionaire last month. I was in Hong Kong, but then he said he wanted to meet me, so I jumped on a plane that night, flew to Dubai, and he was telling me about some other guy that pitched him. He's like, yeah, he's got this artificial intelligence stuff where it makes all the decisions for you. And I leaned forward and I'm like, so you want to give this guy money and he doesn't like to do the work? He doesn't like to do the analysis? He doesn't enjoy reading about policies at central banks? He doesn't like doing analysis of charts? He doesn't like to stay informed about politics and geopolitics and policy? This guy's like cutting corners, and you want to give him a very, very significant amount of money so that like his robot does it for him? Like, that sounds terrible. I love doing the work. I love doing the analysis. I enjoy it. I want to do the work. I want to make decisions, not just constantly react in some weird fuzzy logic. Yeah, so do you want to be lazy? Did you make all your money because you're lazy and you're trying to cut corners? I should have said that. Oh my God. I was drunk on Indian food anyways. Oh, Indian food and Thai food. Indian food and Thai food, man. I get intoxicated. The flavors are so incredible if you go to a nice restaurant. Oh, go to Dubai. The Indian food is crazy good. So anyways, so I had dinner with him the same night. Like, literally, we drove to the airport after dinner, got on a plane, flew back to Hong Kong, did my webinar with Traders Way clients. Isn't that funny? Because I'm not afraid of doing the work. I love the work. I'm not lazy. I have crazy, ridiculous, sickening work ethic on a foundation of love. So I have a trade plan here. I don't know if it's true. I'm going to have to do some work. I'm going to have to do some analysis. But if this changes direction, I have about 3 or 4 or 5 other hypotheses that are all linked to this one. And therefore, then I'll use technical analysis. If this one's confirmed, then I'll flip over to all the other trades. What's going on oil? What's going on gold? What's going on CAD? What's going on US dollar? What's going on yen? What's going on Swissy? What's going on pound? Flip over and then start doing technical analysis to enter in the macro trend, where some other person's probably still selling last week's trend or last month's trend, and they don't realize it's already over. So they made 300 pips last month, and now they're going to lose 300 pips this month, and then they're going to, I don't know, try a different strategy. Maybe I'll use the CCI better. Maybe it's the ADX. I don't want to use the ADX anymore. I'll try something else. And if Forex doesn't do it, I'll take that options course. I'll take a course on trading options. And some guy told me all you have to do is straddle the market and you can't lose. All you have to do is buy and sell at the same time. And it's awesome. It's like printing money. It's free. It's even better than the London breakout strategy. Fall in love with being a professional. Fall in love with being the one that does the analysis and has an opinion. Let me share my opinion with you about what the euro is going to do, what the pound is going to do, what the dollar is going to do, what the yen is going to do. And how do I know this? I study not just economic data, but global macro data, central banking policy. I know everything there is to know about the central banks. Let me tell you what's going on here. Let me tell you what's going on there. Here's the concern. Here's the outlook. Here's where we're going to be in 12 months. Here's what we should be doing now to prepare. Don't cut the corner. Right? Don't cut the corner. So that's cool. So I got some work to do. I might want to look for that. So maybe some dollar weakness. That would make this go up next week then, wouldn't it? But only if gold goes up. Okay? If this goes up, that'll go up. Well, isn't it interesting that pound dollar is right next to the monthly support pivot? So wouldn't it be neat if it came down and then went up? Well, that would be called a trade plan, and you need to develop technical analysis skills to confirm and then enter if necessary. But we don't know if it's necessary. Okay? If gold goes up, dollar goes down, oil goes up. Well, here's the monthly support pivot here. But we're at a pivot now, which I told you, which is the aggressive one. This is where a bull would want to go in. Where a bull would have told you 3 weeks ago, I would like to go long at 49.32. That's what a bull would say. A market going neutral would drop to the further one, which is 49.11. If that's true, then the target is only here at 54. And that's a neutral market that could potentially roll over. So that'd be a 46.54. I was hoping for a 55.55, 46.54. Still, wouldn't it be nice to have a 46.56? That would be up here. So in that case, we need to go long R2, which means we're probably doing it on Monday. Or not R2, sorry, M2. Sorry, M2 to R2. That would get me to my 46.56 range. But a month ago, I was only talking about 45.55, and that conservative target is right there, 55.25. So there's a lot of like maybes in there, right? But that's why you need technical analysis. If you open a chart and you don't already have a plan, you've already lost all your money. The technical analysis only tells you when to buy, like at what price and what time you should enter your trade plan. Okay? So now I got lots of different things. So if gold is going to go up, dollar is going to go down, commodity currencies will rally, funding currencies will fall. So that means dollar down, Swiss franc down, yen down. But that might put the pound up and euro up. What about the Singapore dollar? Don't even get me started. Yeah, Henley says the 200's there, but you know what? This is, to me, it's not quite important yet. The next rally higher would make it important on this time frame at least, because it's flat. Okay, so you could draw it like, look, here's the 200 here, and here we are now. So we're at fair market value is basically it. So it's kind of meaningless to me. To me, there's just based on that, there's a 50-50 chance it could go up or down. I don't know if the bulls will take over. I don't know if the bears will take over because we're at fair market value. So that doesn't help me. Okay, so you can't be too mechanical and say, well, you know, we're 3 pennies above the 200, so we're bullish. No, it's neutral. Okay. So like up here, we're kind of bullish until we crash through, and then it's dead. Okay. But when I was talking about 45, it was this dip. So 42, I had declared on this trip down, I declared that a bottom had been printed in oil based on macroeconomics. Simply that everything in the world is better off than it used to be, so there's no need to drop to 40 bucks a barrel again. Because I studied and analyzed global macroeconomic data from multiple countries, right? So I said, there's no way this is going to go back down to 40 or 35. We've printed bottom. That's my humble opinion. I made the decision. I'm done. So we used to print a bottom here at almost 41, 42. Great. So if we're not going down to 42, where are we going to go? And I said, 45? I mean, that's it, right? How about 45? Great. So then I said 45 will be our bottom, and then we're going to go up to 55. Why? I don't know. More than 50. Finally time to break out of 50. Again, just a hypothesis. I probably had some pivots and stuff in there last month or the month before. This goes all the way back to June, for crying out loud, right? So back in June, and then again in July and August, I'm like, okay, we made some major touches, right? So I said, we'll go from 45 to from 45 to 55. General hypotheses. Well, then along the way, you can see, you can make decisions. Oh, went to 46, made a higher high, higher low, higher high, higher low, higher high, higher low, higher high, blah, blah, blah. At some point, you're on the clue train. I think a lot of people have been taught or are trying to cut corners. And I'm trying to tell you, if you're trying to cut corners, if you're looking to your charts for answers, you've already lost your money. The charts are inherently lagging. And even if you put leading indicators like pivot points, it doesn't tell you direction. So people tell me like, wait, I got my pivot points. How do I know whether I should buy or sell? Well, pivot points don't tell you that. Why don't you flip a coin? Because if you flip a coin, at least you know if you're a bull or a bear. Now all you have to do is say, oh, look, I'm a bear. I sell at resistance. Great. My next question will be, where's the resistance? And so you'll identify 2 or 3 levels of resistance. I'll say, good. If price goes up to those levels, drop into a smaller time frame, look for a reversal pattern, look for a moving average crossover, look for an oscillator crossover, look for something, but whatever you got, your confirmation, dump it, and you'll be fine. That's it. And it was based on flipping of a coin, but it gave you a strategy, and then you had clear rules of engagement, tactics, clear and precise tactics for your rules of engagement. And if you get the opportunity, you take the shot, you'll probably win. If you don't get the opportunity because you had the wrong strategy, then your tactics never get deployed. You see what I mean? It's like landing in the wrong territory. You're like, I don't see any bad guys down here. Are you sure this is Baghdad? And you're like, no, I think we're in Turkey. I think we're in the Turkish mountains. We're on the wrong side of the border. Well, don't start shooting people in the village. Head south, bro. Cross into Iraq. Keep heading south. Baghdad's that way, right? So you just got to find like, wow, whoever dropped us in Turkey got it wrong. Right? We got it wrong. Something's really messed up. But if you dropped in the middle of Baghdad during the war and your job is to get bad guys, well, you got plenty of things to do now. Right? And I know these are far-fetched analogies, but how many times do you buy in a downtrend and sell in an uptrend, or go heavy in a sideways moving market? Now I'm in the middle of a range. Let's drop some big money on here. Let's move this thing. Like, what are you doing in the middle of the range? What's wrong with you? Is that support? No. Is that resistance? No. Why'd you sell? The MACD told me to. Really? The MACD told you to. Stochastics is crying. The stochastics. Dude, if you're a bull, you buy at support. If you're a bear, you sell at resistance. That's that. If you don't have that, then everything else is worthless. If you're at resistance and you bear, and then you get a MACD crossover or oscillator crossover of whatever kind, or a moving average crossover, or a 1, 2, 3 pattern, or head and shoulders, or whatever that you're using, suddenly appears there a reversal pattern at support or resistance at precisely the right price and time that you would expect, maybe you should take a shot. Deploying the proper tactics with the right strategy. So when I show you gold for 9 weeks went up and you were selling, that's why I say you got to stand up, kick your chair and say, what the hell is going on here? How could this go up for 9 weeks and I not make money? Where am I going wrong? What am I doing? What time frames am I making my decisions on? How close are my stops? How big are my lot sizes? If I need bigger stops and I need smaller lot sizes, like, you just got to like freak out and make the change. Most people don't even look. I'm asking you to change. Right? So anyways. If you want to make a bit of change. So, what do we got left? What do you want to do for a half hour? Smoke some cigars. What do you want to do? I see setups for Monday, like this one. This gray zone here is to remind me to buy. So there's further dollar strength. I need to stay with the trend until it stops. So maybe Monday this drops, rises, hits the target, and then the dollar weakens. I still love it. I love it, man. So I'm thinking buy and then sell. Tricky though, right? The other thing I could do is just ignore it because it looks that way. Well, Ron, it's all the same thing now. I told you, if gold goes up, first of all, gold has to go down, hit the support, and then goes up. If that's true, dollar will weaken, Swiss franc will weaken, yen will weaken. What more do you need? So right now, I have to stick with the trend. Higher, high, higher, low. Okay? Down to the roll reversal. But see, roll reversal here and here. Then I look at the pivot cluster. So I'm thinking it's going to make a 618, predicts a 1382. 1382 is here, right here, which just happens to be the monthly target anyways. A monthly R1, that's monthly resistance. So, and based on this move here, the central pivot will drop, will rise. The R will rise. So this will be a cluster next week of weekly resistance, monthly resistance, and my 618-1382 move. So we'll go pivot cluster to pivot cluster. I'll take my profit. Then gold will hit its support, go up, and USD CAD will drop down as oil prices rise. Okay. See? It's just that easy. I'd like that to happen Monday. In fact, I'd like to gap up and then drop it. Fill the gap and then drop this all the way down. But gold's got to lead the way. Let's do the time will begin. So I guess we should do further analysis on said dollar. Aussie at support. Euro dollar trying to head down. Look at that. USD yen up. So I think what I want to do is this, this, and this. I think I have to do this. and it flipped again. I wonder what the programming is. Right. And then to get the congruency correct on the denominator, I need to change this, and we'll change this to USD Kitty CAD. There we go. 1 hour, 1 hour, 1 hour, 4 hours, so that's going to be 1 hour. Coolio. Back this out. Back that up. So, dollar strong, dollar strong, dollar strong, dollar strong. And we're worried about next week, a change of trend. So where would that happen? And I'm saying one here. I'm saying this one's so short. It's amazing. Here. This one's much clearer. And this is upside. I already have it done for you, so I'll do it again. Looks like I did this a couple of weeks ago. Cool. So those are all the plans if dollar weakness comes in. Right now, dollar strong. Why is the dollar strong? Why is it that we lost jobs and money is flying into the United States? I showed you the Fed watch. It's even more certain now. 94% chance the Fed's going to raise interest rates in December. Interest rates are going to go up. Cool. And the other thing too, so I know this is all messed up because of the hurricanes, but if the economy is adding less jobs, there's less pressure on wages, which means inflation is going to stay low, which means the Fed will raise interest rates, but at a slower pace, which means money is cheaper for longer, which is also very good for the stock market. Because the stock market will go up until interest rates are so high that a company cannot be profitable. It eats into their margins. Let's say like 5% or something, right? But if interest rates are going to be normalized and then raised, it's such an unbelievably slow pace, then money is cheap for longer. And that's good for the stock market because profit margins will be profitable because the cost of borrowing isn't eating into your profit margins. So, ist gut, ja? It's very nice. Right? It's very, very nice. Zoop, 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 zoop. Here's one. So, yeah, in my guesstimate, let me change all of this. Let's just do a basic template. In my guess, which one of these did I say? Which one did I say would get weak next week? Wow, look at this one. Oh, I set that up beautifully. Look at that. Damn, boy. It's a thing of beauty. I'll leave that one. It's just too pretty. Which one of these did I say would weaken? The yen or the Swissy? This is the yen, my only friend, the yen. I'll never carry trade again. Yeah, I'm waiting for an answer. I know there's a lag, so I'll wait. And you picture what will be. Da, 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 da. Desperately in need of some stranger's hand. I swear Jim Morrison constantly sang about currency trading. In need of a stranger's hand in a desperate land. You want someone else to make decisions for you? And trading Forex? Because you need the money? Oh my God. Let me tell you about heartache and the loss of God. Wandering in hopeless night. Probably describes your trading. Yeah, look, yen, Ron, I said both. I said dollar, I said yen, I said Swissy. So this will tell me which one to go first. If Swissy yen is going up, then I buy pound yen, euro yen, Aussie yen, Kiwi yen, so on and so forth. If this falls, then I long euro yen, pound yen, sorry, I messed it up again. Euro Swissy, pound Swissy, so on and so forth. And then once I got that boat loaded, then I get a new boat and go on yen pairs. Oh, snap. But one would expect this to go up now, right? That's not my opinion, that's technical analysis. Which means if it doesn't do that, if we get something like this, it's a meaningful breach. It means something. Yeah, Brooke, maybe, if I can. Okay now. 12 minutes. What else is interesting? I mean, look at this stuff. This we did several weeks ago. Check it out. The uptrend to the break. So I said, well, you got to pay attention to the roll reversal. So I drag that cross. That's your future buy zone. And this can be confirmed by the channel because we had done one of these. So there's a downward channel, which should take us to the roll reversal, in which you would expect a double bottom, higher high, higher low, long scenario. Like, look at how how just gorgeous it is. Look at that. Like, look at that, the double bottom at the roll reversal, suggesting the potential end of the downtrend, followed by a higher high, higher low, up to the resistance area. It's like, oh my God, that is so beautiful. Take care, Brooke. Just amazing, right? Love it. I hope you see it. If you don't see it, you should be asking questions. I look at that and I'm just like, nice. So does pound Swissy go up next week? It's hard to be aggressive on the pound after that move, but let's take a look. So what could we do to look? What would we look at if we suspected a potential pound Swissy up move? Well, we hit the conservative target for today. I think we should change this up. I'm going to change this to a pivot cluster. And this is totally messed up. Forget it. I don't even want to look. All right, new one. That doesn't look good. Euro Swissy maybe. This should also go up next week if that is true. And well, look at this. This is something I've missed. Wow, I'm a little upset. Okay, good. If you are a bull, that's it. That's all. That's the hard decision you need to make. Then for your monthly swing, this is your projected entry. You would have known that on the first day of the month. It's not even a debate. Okay? There is no other, by the way. Below that, there is none. Unless you hit the projected bearish target first and then you're doing a counter trend trade off the profit taking, but that's different. If you're a bull, that's the only major entry for you to buy. There's nothing below that. It's predefined on the first of the month. The 140, whatever that is, 140? That's it, 140.009. Now, if you're a weekly trader, you're a weekly swing trader, you're not going to be in this for 3 weeks. You're going to be in this for 3 or 4 days. You got it? That's a weekly swing trader. You know what price you buy at? This one. So you might have bought on that move. I mean, that wick was probably it, the buyers. I totally missed this, but look how gorgeous that is. So you long here and your stop's here, and you're fine. Now you're up here, and now you've moved your stop. Now you see you made the higher high, so now your stop's here. Then you're moved to the next higher high. So your stop's in here, right? And now this is struggling. I would actually jam it into here. But gorgeous. So monthly and weekly agree. Check that out. Oh, I'm so sick. I missed that. Okay, weekly target is did I say 140? I guess it was 114. Okay, so the entry was 114. The target is 116.66. That's for the weekly. Yeah, but the monthly target is 166.66. They agree. But the aggressive is 117 and some change. So maybe you can get this 1 to 17. But the thing is, why would you care? Isn't 116.5 good enough for a weekly, especially when you, I mean a monthly, especially when your weekly says you should take profit and run? So that's just gorgeous. So now, if we get next week to behave and gold goes up, this might be interesting. I don't know. Now, I don't typically trade Euro Swissy that much. So I got to be careful on the correlation with the gold. But I'm thinking global macro decency. See, when things are good, the dollar's weak. The stock market is overvalued in the United States because everybody bought it. So now, if you're a billion-dollar hedge fund manager looking for value, you don't find it in the United States. You'll probably find it in Europe. You buy some Italian bank for pennies on the dollar. Boom. So now you convert dollars to euro and you make your investments. So dollar's weak because everything's good. Okay. Swissy is weak because you don't have money locked up in your Swiss bank account. You're investing it into Italian banks or to Spanish insurance companies. You got it? So if we get one thing right, macroeconomics looks good. Everyone's discounting the bad news today because of the hurricanes, and that if anything, there's going to be at least some sort of productivity increase because they're building new homes and new Applebee's and cleaning roads with bulldozers, and those companies are making money, and the government's going to throw free money at this thing, and it's great. People end up doing well. And if they were smart, which they're not because people is stupid, they're going to rebuild things not only as bad as they were built before in the 60s and 70s and 80s, right? When everyone was on drugs, they decided to build some communities and plan cities. Now they're going to build it even worse because they're lazy and uneducated and they have worthless parents. So, boom, it's going to come out worse. Now, the Caribbean, you'd think, oh, we could rebuild Puerto Rico. We can rebuild St. Thomas. We can rebuild the Virgin Islands, the U.S. Virgin Islands. We could rebuild the U.S. BVI and U.S. Virgin Islands and stuff. We could rebuild Barbuda and do it right this time. Yeah, but you just know they're not going to. It's sad, though, isn't it? There's too many B people hiring C people. Right? You remember how the saying used to be 80% of it is just showing up? Because when you get there, people would be lazy and you're like, I can beat these guys any day of the week. I just show up and win. Now it's like 80% of it is just not sucking. Everything sucks. You know what I mean? Can you think of an example of anything run well? Right? Anything? An example, a model that should be replicated? It's very few. You know? It's sad though, isn't it? Like, oh, let me think about that one thing that is done really well. Yeah. So here's the thing, guys. You need to figure this out. You need to work really hard. You need to be the master of your domain. And over time, over blood, sweat, and tears for years, you will make too much money. Things in your life will change. A lot of people, they come to these webinars because they want to drive a yellow Lamborghini like the idiot on YouTube. It's leasing it for $1,000 a month, and you're paying for it. If you put in the blood, sweat, and tears for years, things will get better. You will make more money. You'll accomplish your important but yet over a period of time petty goals. Things like you need to make enough money to live. You need enough money to send your kids to school and that stuff. And then you're making more money. So then you're like, I'll buy a better house. I can live in a better community. I'll send my kids to a better school. I'll get a nicer car. I'll get a nicer watch. And then all of that's done. And you're your 50-inch TV goes to a 65-inch TV to a 75-inch TV, and then you're like, I don't, I used to have a 110-inch 1080p. And then I'm like, after a while, you're just like, what am I supposed to do? Get a 500-inch TV? Right? After a while, then you just run out of things, and you're like, I'm just at peace. And then you start saving and stuff. And then you get to a point where you can like, I want to make a difference. I want to make a difference. I want to change things. And I think your Forex trading can fund that. Okay? There's always things to spend money on. I got a quote, get this, replacement windows in my house, because I have a 30-year-old house. $225,000 for windows. $225,000 for replacement. Oh my God, $225,000. It's funny. All right. There's always stuff to spend money, and don't buy a boat. You want to get poor quick, buy a boat. But the thing is, maybe you can make a difference. I've worked in nonprofits for 25 years. I do things in the community. This, that, and the other thing. There's all kinds of ways. And maybe, just maybe, you can use your money to fund some pretty big radical ideas. I'd like to remind you that the former or current, I think former, the recent Prime Minister of New Zealand was a Forex trader and made his money in Forex and had enough money where he could get himself into politics and move all the way to the top and try to make a difference for his country. And when you're rich enough, you don't have to take money from a bunch of lobbyists and a bunch of scumbags and stuff. You know what I mean? Yeah, Hanley's going to build a psycho ward. That's awesome. So it's just, really, you should think about currency trading at this whole other level where it should be the thing that funds your contribution to society and the human race. It's pretty big. Well, right now you just want to like quit your job. But I've been there before. So I told you I was actually in a good job, something I love to do, and I was pretty good at it. So my decision is, do I quit this? Do I quit my job that I'm good at and I enjoy? I mean, I love doing it, right? Do I quit? Some of you are in jobs you don't like, and you're like, I got to get out of my job, so I need to make it big in Forex fast. Well, that's a death wish. There is no fast. You should enjoy the plateau. You should enjoy doing the work. But then once you put in the blood, sweat, and tears for years, and you slowly grow your account size, and you slowly grow your lot size, and you slowly start to make money, if you do the right things, like I suggest, like grow your account size significantly more than you pay yourself. Because in the end, the less you pay yourself, the more money you make. And I know that's a paradox, but I discovered that paradox through my business planning retreat I did with myself 15 years ago. And I discovered the paradox through deep thought and analysis, which made an important difference to me. So if you do it right and you grow your account size, all of a sudden you can have a better house. You can provide more for your spouse and for your children. You can have a nicer car. So I didn't need a car because I always did Forex. I always worked out of my home office. And then my wife said, I don't get out enough. I need to exercise more. So I signed up for golf lessons. This was many years ago. But the golf course was a mile away. So I bought a AMG 55 Cabriolet. Nice car. Nice. Mercedes AMG, not even a Mercedes, it's an AMG 55, 5.5 liter Mercedes convertible. Nice. It had a back seat for the babies. I could fit golf clubs in the back, even with the top down. Great. I drove that 5,000 miles in 5 years and spent probably $10,000 in maintenance. So now I don't even own a car. I don't even need a car. I drive an easy-go golf cart. You don't need these things. After a while, you'll find you don't need these things. It's fine, but you can get one. Don't be embarrassed. You earned it. You deserve it. Get a nice car, for crying out loud. Get a nice house. Have a nice watch if you want, right? Doesn't matter. It's worth it. Watches just lay over there. I got one here. I don't even like it. I got one over there. Just lays there. Doesn't do anything. But you can give back to society. But these things take time and they take a lot of money. I mean, they can take a lot of money. But if you had more money than you need, you can contribute to society in all kinds of ways. And it's just comes from Forex. It's just, I'll make it in pips. Don't worry about it. Right? I don't even like giving money because I find that, like I said, people is stupid. Even people with good intentions, right? They're not good with money. Just people are not good with money. They waste money. They lose. It becomes excess and then it becomes waste. And I hate wasting money. So I'll do things like I'll cook chickens at 3 o'clock in the morning, hundreds and thousands of chickens and that kind of stuff. Or I'll sit on boards, or I'll mentor young traders or college students, this, that, and the other thing. But if money is what you need for your projects, let Forex do it. And that's really the power, the freedom to do whatever you want. So I'm going to wrap up, and then I'm going to go sit in my back deck. I'm going to smoke a cigar. I'm going to read a book. I'm going to prepare for my homework I have due next week. I'm taking my family on a vacation over the weekend, but I got to get back. I got to get back. And just, it's cool, man. It's cool. Make it a lifestyle you enjoy living. If reading a report from a central bank is work, you need to change your attitude. You should look forward to the World Bank report or the IMF report. You should look forward to that. I can't wait for it to come in. I got to look for the World Outlook. I got to read this. I love it. If you can get to that point where you're trying to get a black belt, but you enjoy just being at the gym, doing basic punches into the mirror, and you're just like, I love doing this. I love the smell of the mat. I love the discipline. I like the hard work. I need that. And the guy comes in and he's like, no, your thumb is like this, not like this, like this. If you enjoy that, you're gonna master this, because it's not a work. Forex is not a work. It's a privilege. But it's blood, sweat, and tears for years. And there are two reasons most people don't make it, right? They're either incapable of the hard work, right? Or just unwilling. They know what to do, they just can't do it. So I'm here every single month at FX Street for non-farm payrolls. 138 months in a row. I've been doing this for 12 years. Just at FX Street. Okay? And every single day, other than non-farm payrolls, I'm at tradersway.com to help clients. So I do live webinars like this every day, helping you be a better trader. I'm not going to tell you what to do. I'm not going to put you into trades. Right? If I was doing that, I would charge you a hell of a lot of money, and you better have billions. But if other than that, I'll just teach you how to do it for free. Simply because you're a client of tradersway.com. So open that account. Tradersway.com. Throw your diamonds in the sky. And thank you to FX Street. Thank you, guys. Another wonderful webinar. I've enjoyed, I think, every one of them. I might have had a grumpy one in there or two. You're beautiful people. I can tell you 13 or 14 years ago when I started working with FX Street, we talked right from the very first meeting about we wanted to do something that that really, truly helped you. That's my relationship with FX Street. How can we help you? And I get emails every so often, maybe twice a year, where they're like, we have an idea. We think it will be helpful to everybody. Can you help? Can you do it? Can you participate? And most of the time I say yes. And that's the relationship. But it's only been 14 years. Again, 14 years ago, there was barely even an industry. So think about FX Street being around that long, huh? And that I'm still here. So anyways, peace on earth. May the pips be with you. May our profits be above average. I hope to see you Monday morning at tradersway.com. Remember, in your back office after you open an account, even a demo account, takes you 1 minute. Go in the back office, top right-hand corner, it says webinar, live webinars. That's me Monday morning, me and you. I'll see you at 7:30 a.m. ET. Thanks, guys.